Everybody ready to begin? Okay, we're on the record. Good morning, everyone. Any preliminary matters before we begin the hearing? Nothing? My understanding is that New York City witness Arnett can be excused because there's no longer any cause for him. Is that correct?
That's my understanding, Your Honor, yes.
Okay.
We have stipulated to mark a couple of discovery responses as exhibits.
Okay. And also the DPS Shared Services Panel, which was scheduled for Tuesday. I have that down as having no cause. Is that correct?
Yes, Your Honor.
So that panel will be excused and done by affidavit. Okay, now let's proceed. Con Edison, if you could call the first witness, please.
The company calls its accounting panel.
And reminder, you got to say your name when you start talking. Sorry.
Thomas Riozzi, R-I-O-Z-Z-I.
Could the panel stand, please? Raise your right hand.
doesn't appear to work.
It doesn't light up. It just tap the. You can tap it again one time. All right. So we can just push it. That one doesn't light up.
Okay, raise your right hand. Do you swear or affirm that the testimony you're about to give will be the truth, the whole truth, and nothing but the truth?
We do. We do.
And you adopt your pre-filed testimony as your sworn testimony in these proceedings?
Yes. Yes.
Thank you. Please be seated. Go ahead.
Do you have any substantive changes or corrections to your testimony?
Yes, we have corrections to the rebuttal and update testimony for electric, gas, and steam. For electric, on page 68, line 5, the words should not be in that sentence should be removed. Our gas rebuttal and update testimony on page 41, line 8, the words should not be should also be removed. And our steam update and rebuttal testimony on page 38, line 10, the words should not be should be removed or stricken from that testimony.
Do you have any information available now that you indicated in your testimony would become available that you would like to report?
Yes. In our electric update and rebuttal testimony, we stated on page 31 that we expected the actual amount of renewal premiums for property insurance to become available during July 2013. The information did become available, and the company provided this information and supporting documentation to staff on July 17th. In a supplemental response to staff, IR DPS 73-0749. The now known premiums for property insurance or conventional property insurance are $10,767,000 and result in an increase in insurance expense for the rate year of $803,000 for electric, $56,000 for gas, and $475,000 for steam over the amounts reflected in our exhibits at this time. And those increases should be reflected in the revenue department.
The panel is available for cross-examination.
Thank you. New York Energy Consumers Council for 60 minutes. Sorry?
5 minutes?
I've got you down for 60. If you want to do 5, it's okay by me.
No. I only have 5 minutes. 60 minutes is
Okay, please proceed.
Good morning, panel.
Start with your name, please. Sorry.
Sorry.
I need you to say your name for the record so that we'll have it.
George Stephen Topos for the New York Energy Consumers Council. I'm going to show you a document provided in this article.
Smart. save a little time, was this response prepared by the panel or under its direction?
Yes, it was.
And is it still correct?
Yes, it is.
Okay. One-page response to E036 will be marked Exhibit 888 for identification.
Panel, is this document prepared by panel?
Yes, it was.
And does the panel currently have any changes to its previous response?
No, we don't.
Now, in your response to this interrogatory, you indicated that this Court of Appeals decision, that the matter remains open to further action by Con Edison. Has Con Edison taken any further action since this response?
Yes, the company has taken further action, and it has disclosed in its 10Q actions that it has taken.
I'm sorry, what is the action that was taken?
Basically, we believe we've reached a settlement with the IRS, and we're working on a settlement, and we're unwinding some of these obligations.
Could you speak up a little louder?
It's my understanding that we've disclosed in our 10Q the actions of our annual quarterly filings to the SEC, the actions the company is taking. We are unwinding some of these transactions, and I believe we've reached a settlement, at least in principle, with the Internal Revenue Service.
Hey, Rich, could you just make sure your microphone's on, because I can barely hear you.
Is it on? Okay.
Just have to speak louder.
Okay.
I have the same problem. So just so I understand, this settlement that is resulting, will that have any effect on ratepayers, either in the rate year or in rate years to come?
Objection, Your Honor. If the settlement is in process, the company declines to comment on it.
This is, the settlement we're talking about is current pending litigation?
Discussions between the company and the IRS.
Sustained.
In that case, Your Honor, I have no further questions. Thank you, Mike.
Thank you. DPS staff, I have you down for 10 minutes.
Your Honor? Your Honor?
Yes.
Could I just clarify, NYECC had down 5 minutes for each of the accounting panels. Does this mean we'll be going back to NYECC when we get to gas and steam?
No, Your Honor.
I'm sorry.
we will not.
I'm sorry. This is my fault. Hold on a second. I take it back, staff. Hold on. I was looking at the wrong day. That's why we were so off. You have, NYECC has 60 minutes for the compensation and benefits panel tomorrow. Is that
That's
correct?
correct, Your Honor.
Okay, I'm sorry. That's my fault.
A maximum.
Okay, so you did your 5 minutes. UIU has 5 minutes. Is anybody here?
Your Honor, again, just a clarification, so
Yeah.
Mr. Diamantopoulos, this is Mark Richter, by the way, had down 5 minutes with each of the accounting panels, so I just wanted to know whether or not.
Okay, are you saying that the gas account panel and the steam accounting panel are identical witnesses?
They are.
They are, Your Honor.
Okay, then we should do it all together.
And that's what I did, Your Honor.
So
I
you're
have no
done,
further
you're done
questions.
electric, gas, and steam?
I'm done. Thank you.
Okay,
As to this time.
all right. Okay, Is there, UIU, it's your turn, and you have 5 minutes.
Your Honor, we're going to have to pass.
You want me to come back to you?
Yes, we're at our office, our printers aren't working, we're going to have to ask staff to bring some documents.
Okay, is the union here? Okay, Westchester, have you down for 20 minutes?
Yes, thank you, Your Honor. Bavita Modi on behalf of Westchester County. Good morning, accounting panel.
Good morning.
I represent the County of Westchester, and I have a few questions concerning the company's general escalation adjustment. Escalation rates seek to reflect the cost of inflation, correct?
That is correct.
Inflation rates are generally set on an annual basis, correct?
I don't know what you mean by set.
They're usually accounted for in rates on an annual basis.
I'm not sure what you mean by accounted for. We have projections of what inflation rates will be in the future, and we apply those to our historic test year costs to come up with amounts for the rate year. But they're not set, they're based on a projection.
So you project for the cost of inflation on an annual basis?
We use government statistics that indicate what the GDP deflator would be, and we apply them to our historic test year data. Yes.
I want to refer you to your rebuttal testimony on page 35, lines 9 through 18.
Which testimony?
Your electric rebuttal testimony. There you indicate that the revised 4.5% general escalation rate proposed by the company represents escalation from the historic year to the rate year, not annual rates. Do you see that?
Yes, I do.
In fact, the 4.5% general escalation rate is based on a 30-month period, correct?
It goes from the test year, 12 months ending June 30th, 2012, through the end of the rate year, 12 months ending December 31st, 2014.
So that's a 30-month period, right?
Correct. It covers escalation from the historic period through the linking period, which is the 6 months ending December 31st, 2012. Calendar year, actually, it's not, it's 30 months. 12 months ending December 31st, 2013, and 12 months ending December 31st, 2014.
Thank you. And looking at your rebuttal testimony at page 99, again, this is the electric rebuttal. At lines 16 through 19, the annual inflation rate based on the 4.5% escalation factor would be 1.8%, correct?
I'm sorry, I'm not seeing what you're referring to.
I'm referring to page 99 of the accounting panel's electric rebuttal testimony.
Perhaps that's an incorrect reference for the subject.
Yeah, mine only seems to go up to page 59.
The electric.
I'm not sure if I have the corrected or the original one, but it does start at page 99. Do you have that?
Yes, I do. Yes,
Thank you. Referring to lines 17 through 19.
Yes. What is your question?
Hold on a second. Is this a corrected version? Is that,
Yes.
how many pages is the corrected version?
I'm sorry, this was the original version. It's not the corrected version. On the corrected version, it's on the bottom of page 97, starting at line 17 through page 98, line 5.
Okay. All right, go ahead.
There, it states that the annual inflation rate based on the 4.5% escalation factor would be 1.8%, correct?
It says approximately, yes.
In this case, the company is seeking changes in rates for a 12-month period, correct?
The rate year is 12 months ending December 31st, 2014.
If the company's position is accepted in this case, would the company recover more or less than 1.8% for general escalation costs during the 12-month rate year in 2014?
The company should be recovering its actual costs, which were based on a 12-month period starting in June 2012. It was projected forward, so we applied escalation for 30 months to get to the 12 months ending December 31st, 2014. It's a procedure that's been followed in all cases in New York.
Could you either go closer to the mic so this?
My question is, would it be more or less than 1.8%?
I believe the question's been answered.
I've asked for a specific number, Your Honor, based on their proposal, and I'm just seeking clarification of that.
Well, it's a very simple question. Can you just answer it, please?
The escalation applied to calendar year 2014 would be 1.8% approximately.
Thank you. I have no further questions.
Assemblywoman Holland.
Stuart Glass for Assemblywoman Fallen. Do you know what are the estimated costs to remove the fuel oil tanks at Hudson Avenue?
No, we do not.
Do you know what are the estimated costs to demolish and remove the rest of the buildings, equipment, and facilities at Hudson Avenue?
We do not have that information.
Do you know if there's any other costs that will be shifted from the steam system to the electric system as a result of the transfer of Hudson Avenue?
I'm not aware of any.
Do you know if there's any contamination at the site?
I do not know.
Do you know what the annual taxes that will be paid, be transferred from the steam system to the electric system on the transfer of Hudson Avenue?
It's my understanding the annual taxes are $273,000.
It's stated that $92.3 million in undepreciated costs is proposed to be transferred from the steam system to the electric system as part of the transfer of Hudson Avenue. The electric property tax and depreciation panel computes that to $4.6 million over 20 years. Are there any carrying costs, interest, return on equity associated with the undepreciated costs?
Yes, there would be.
And how much are those on an annual basis?
It depends on the allowed ROE, but it would be somewhere between total carrying costs, including property taxes, depreciation, and the return would be somewhere between $13.5 and $15 million.
And that $4.6 million is included in that?
Yes, it is.
Is that stated anywhere directly in the testimony?
No, it is not stated in the testimony. The transfer was reflected in our exhibits. I just did the math to calculate what the value of the carrying charge would be based on the company's requested ROE and based on what staff's recommended ROE would be.
Are there any O&M costs that will be transferred to the electric system?
We are not aware of any at this point.
Will any employees be necessary to maintain the facility or guard the property?
That's a question we're not able to answer.
Do you know if you have to heat it to keep the electric on?
I don't know what ongoing operating costs would be related to the facility.
But you can assume that there will be some cost.
I don't know the answer to that.
For every year that the steam system retained Hudson Avenue beyond 2011, is it safe to assume that the steam system would be paying that 13.5 to 15 million per year, and that would therefore reduce the obligation of the electric system?
The carrying cost for the plant was included in steam rates at this point in time. What happens after January, I don't know who's going to bear the cost related to this facility.
I'm a little confused.
Steam rates currently provide for recovery of the carrying cost on the Hudson Avenue facility. Once rates are reset in January, I'm not sure who's going to bear the burden for this, the carrying cost.
So even though you say you transferred the property in 2011, the cost would not start until 2014, is that correct?
We did not transfer we transferred the land. We did not transfer the unrecovered book balance of the property.
Thank you for that clarification. Do you have a breakdown of costs between steam and electric for the property that was located at Hudson Avenue?
I don't know what you're referring to.
There are certain items that would have been attributed solely to electric plant. Is that correct?
Are you talking about the time of the transfer from electric to steam?
I'm talking at the time that the equipment was put into service.
The facility, I don't really know what you're referring to. The facility's been in operation for, I think, 80 years. It's been transferred back and forth.
On either the books of the steam or electric or anywhere else that the company may keep them, is there any accounting of costs broken down the Hudson Avenue equipment and facilities that is broken down or allocated between the steam system and the electric system?
It's the facility has been retired, so it's my understanding the amount that was retired was all charged to the steam business unit. It's all on the steam books.
So you do not, I don't want to belabor this, but you do not have a breakdown between electric and steam based on usage.
At the time the unit was retired, it was all on the company's steam books.
Are you asking about historical data?
Yes.
Or current data? Because it sounds like the answer is current data.
Yes, I'm looking for this historical data.
So 10 years ago, was it different?
No, it was not.
20 years ago?
20 years ago it was different.
Okay. Keep going.
Are you aware that when 59th Street and 74th Street were transferred to the steam system, the electric system was required to continue to pay the fixed operation and maintenance costs and property taxes for a number of years after the transfer?
The electric department pays a portion of the carrying costs and the property taxes. There's a gas turbine at 59th Street. There's also substation 74th Street. There's electric facilities on those properties as well. The electric department pays the electric share of its share of the cost of the facility. Common facilities are allocated between electric and steam.
That was not my question. Do you recall that when 59th Street and 74th Street were first transferred to the steam system, the electric system was required to continue to pay the fixed operation and maintenance costs and property taxes until the money was received from the sale of the First Avenue and other properties?
As part of the divestiture, I'm not familiar with those
Would you
terms.
accept that subject to check?
Your Honor, I think what happened in that proceeding is a matter of public record. We need to cite the commission orders in terms of what the commission determined should be the appropriate allocation in that case, for the various reasons that the
Thank you,
commission
Mr.
may have
Ritter.
determined were underlying that allocation.
Thank you, Mr. Richard. Have you done any study projecting the total percentage increase over the next 10 years on a delivery revenue basis, assuming the same ROE as proposed by the company in this case, and the projected capital program for the next 10 years, including infrastructure investment and storm hardening continues at the same rate?
No, we have not.
Can you provide any sort of back-of-the-envelope estimate of the 10-year total projected percentage increase on a delivery revenue basis?
Objection, Your Honor. The witness said they have not performed the study.
I'm just asking now. I understand they said they have not performed it. I asked if they could do a back-of-the-envelope.
They could have pursued this jury discovery, which went on for over 4
Okay,
months.
the question is allowable. I'm not sure it's going to get anywhere, but the question is allowed.
There's too many variations. We don't know what the growth in sales will be. There's a lot of, we don't know what the increases in O&M are going to be, what inflation will be, what the cost of financing will be. There's a lot of variables, and you have to make a lot of assumptions. It's not something you can do in the back of an envelope.
I have one question that I need clarification, and I do apologize in advance, and please bear with me, this will be my last question. On page 129 of your original direct testimony, lines 5 through 9, could you explain what that's referring to and what that means?
Which testimony?
I think that was the 125
Electric, gas, or steam?
electric, I'm sorry.
I'm sorry, what line reference?
It's lines 5 through 9.
Page 125, is that?
129.
Oh, I'm sorry.
That's okay.
Yes, the company is requesting the amortization of the Hudson Avenue costs over 20 years. As we amortize those costs, it reduces the company's balance or unamortized balance, it reduces rate base. The $2.3 million represents half of the annual depreciation cost or amortization costs related to the amortization of Hudson Avenue. So that lowers our investment.
Thank you. I have no other questions, Your Honor.
Thank you. Is UIU now ready to proceed?
Your Honor, I think we can start. Staff is printing some documents, but I don't need those for a few minutes.
We'll only have you down for 5.
Well, I think I might need 10.
All right, why don't you get started?
I'll get started. Good morning, panel. My name is Saul Woodberg. I'm representing the Utility Intervention Unit of the New York State Department of State. Now, at pages 1 to 3 of your direct testimony, you describe your background and qualifications to present accounting testimony. Is that correct?
That is correct.
And each of you has been trained in accounting and holds a bachelor's degree in the subject.
Yes.
And some of you have gone on to obtain NDAs as well?
Yes.
All right, now, am I correct that it's management that is responsible for preparing the company's annual reports to its shareholders?
Yes.
Okay, and you're familiar with the term generally accepted accounting principles, or GAAP?
Yes.
Does the company have an official set of books? In other words, do you adjust your annual report to shareholders to arrive at your annual Form 1, or do you adjust your annual Form 1 to arrive at your reports to shareholders?
Objection, Your Honor. The relevance to this proceeding?
I'm trying to follow up on the cross on Form 1 that the depreciation panel deferred to the accounting panel.
I'm objecting to this specific question.
What's your objection exactly?
The relevance of which way it works to this proceeding. If the FERC form is adjusted to something else, or something else is adjusted to FERC Form 1, the relevance to this proceeding escapes me.
I'm going to allow the question because I'm not exactly sure where it's going yet. I want people to make a ruling.
The company maintains its books and records in conformance with the Uniform System of Accounts that is prescribed by the Federal Energy Regulatory Commission and has been adopted by the New York Public Service Commission.
Okay, so now, is the official set of books the form, what's on Form 1, or is it the report to shareholders?
The Form 1 would report utility operations taking data directly from the company's books and records. For external financial reporting purposes, the company does make certain restatements to get to its SEC financials. For example, deferred taxes, for regulatory purposes, there's a deferred debit, PSC account 190, and there's also deferred credits, PSC accounts 282, 283, and 285. For SEC reporting purposes, those are netted together, but for regulatory purposes, we're required to maintain their identities separately.
Okay. Are you aware that the depreciation panel passed on several questions directing us to the accounting panel?
Yes, we are.
Okay. Now, if you can turn to page 31 of the depreciation panel's rebuttal.
What page is that?
Page 31.
Okay.
Okay, and do you see where the depreciation panel states Mr. Majaris also tosses around red herrings such as references to the Supreme Court of the United States and notions of creating regulatory liabilities for net salvage based on SEC, non-commissioned financial reporting rules, which we also address in this rebuttal testimony?
Objection, Your Honor. This subject was discussed with the Property Tax and Depreciation panel. This was not deferred to this panel.
I'm going to allow the question. Go ahead.
May we hear it again, please?
I'm just asking the panel if they see that.
Yes, we see that.
Okay, thank you. And then, does the phrase gross salvage, as defined in the Uniform System of Accounts, generally refer to value received from retired assets?
That's my understanding, yes.
And does the phrase cost of removal generally refer to the cost incurred to dispose of retired assets?
Yes, that's my understanding. It's also referred to as negative salvage.
Okay. And then, does the phrase net salvage generally refer to the difference between gross salvage and cost of removal?
That is correct.
Okay. And does the phrase negative net salvage generally refer to a situation where cost of removal exceeds gross salvage?
We would agree.
Okay, now, does Con Ed include negative net salvage ratios in its depreciation rates to collect the negative net salvage?
Your Honor, that is a question that property tax and depreciation panel could have answered. It was not asked, and it's beyond the scope of this witness's testimony.
If he knows the answer, I'd like to hear it, and let's just get through this, okay?
The depreciation rates that have been approved by the commission include recovery of the original cost of the asset as well as estimated salvage, both positive and negative.
Okay, so the answer is yes, basically.
Correct.
Thank you. And then is it also correct that negative net salvage ratios increase depreciation rates to recover negative net salvage?
I have a problem with the use of the word ratios. The depreciation rates are calculated taking into account the original book cost of the asset plus any salvage, less any positive salvage, plus any cost of removal. So it would increase the rates to be recovered. It would be greater than the original book cost of the asset, but they're not ratios.
Okay, thank you. And is it correct that the company included negative net salvage in its proposed depreciation rates in this file?
The depreciation study includes the negative salvage, positive salvage, and the original book cost of the asset. So the answer to your question is yes.
Okay, and that's routinely done on a historical basis.
Yes, we follow the protocols that have been established by the commission in prior cases.
And the company records the resulting depreciation expense in the accumulated provision for depreciation, amortization, and depletion. Is that correct?
Yes, we debit account, PSC account 403, depreciation expense, and credit the depreciation reserve, PSC account 144.
Okay, I wanted to refer you to what was marked for identification as Exhibit 758. And that is the 3 pages from the FERC Uniform System of Accounts. And if you could just look at General Instruction 25. Do you have that? In that Section 25 is the Uniform System of Accounts describing legal asset retirement obligations.
That is correct.
Okay, so in the context of that general instruction 25, does Con Ed have a legal obligation to incur non-legal asset retirement obligations?
Can you restate that question?
Yes. In the context of FERC General Instruction 25, does Con Edison have a legal obligation to incur non-legal asset retirement obligations?
Objection, Your Honor. Calls for an opinion of law.
I think the way to ask the question is for whatever asset you're talking about. does Con Ed have any costs to retire the asset that are not as a result of an existing or enacted law, statute, ordinance, or written or oral contract, or by legal construction of a contract under the doctrine of promissory estoppel?
Con Edison's depreciation rates provide for the recovery of retirement costs. Some of those costs are for, projects are for legal obligations, and some are not.
So could you give an example of situations where you do not have a legal obligation to incur non-legal asset retirement obligations?
Generally, the retirement of certain mass property, things like poles, towers, fixtures. The company would retire them at the end of their useful life. There's no legal obligation to do that. It would be normally retired and then replaced in kind with similar assets.
Okay. Now, you're familiar with the non-legal ARO reserve that the company has on its books?
The company's depreciation reserve includes funds, or includes amounts that have been collected from customers to retire assets. Again, some of those are for legal obligations, some of them are referring to non-legal obligations.
Now, is the non-legal ARO reserve the excess of the company's collections for non-legal removal costs over the amounts that is actually recorded as cost of removal?
They are recoveries allowed in rates to recover assets at the end of their useful life.
So is the answer yes to that question?
And the answer to the question is that they represent amounts we have collected from customers historically to retire those assets at the end of their useful life.
Okay. And do GAAP and the SEC require the company to report that excess as a regulatory liability to ratepayers?
It's not a regulatory liability to ratepayers. The SEC requires the company for external reporting purposes to reclassify the recoveries from customers for asset retirements from the depreciation reserve to a liability.
Okay. Now, so you're saying that the GAAP and the SEC do not require the company to report that excess as a regulatory liability for ratepayers?
The SEC requires, according to requires the company to restate those balances to a regulatory liability. The SEC account 254 represents amounts collected for future obligations. It's not an obligation to customers, it's an obligation to retire the cost of the asset at the end of its useful life.
Okay, so the answer is yes to the question.
I think he answered the question. He said they owe it to the work, not back to the customers.
Okay. I wanted to hand out a document. It's excerpts from FERC order number 631. It's the first page is the cover page, and then the pages 17, 18, 19, and 20 of the FERC order 631. Is the panel familiar with FERC order 631?
Yes, we are.
And could you just refer to paragraphs 38 and 39?
Okay?
Okay, and is it correct that Con Ed follows the requirements of what was discussed in 38 and 39 of FERC Order 631?
The company tracks the amount of removal costs that it recovers in rates and also the expenditures. So yes, the company does comply with FERC guidance.
Okay, thank you. Your Honor, I'd like this document marked for identification.
We don't need to mark it, it's in order.
Okay. Has a higher value than a New York Post article?
No, it's publicly available and it's from a government source.
The panel could refer to the document that was marked for identification as 759. It's 7 pages from the company's December 31, 2012 FERC Form 1. And if you, page 110 of that document is a comparative balance sheet. Do you see that?
Yes, we do.
Okay, and line 5, that shows a balance in the account of about $6.5 billion. Is that correct?
That is correct. For the
Okay.
12 months ending December 31st, 2012.
Now, if you look at page 123.55, is it correct that the notes apply to the comparative balance sheet and other financial statements included in the company's December 31, 2012 FERC Form 1?
Are you talking about the highlight paragraph?
Yes.
Yes.
Okay. And that highlighted paragraph confirms, I guess, your earlier testimony that collections for non-legal removal costs are recorded as regulatory liabilities for SEC purposes.
For SEC purposes, yes.
Now, if you look at pages 278, 278.1, 278.2, and 278.3, these pages are titled Other Regulatory Liabilities, Account 254. Is it correct that the $420 million regulatory liability for non-legal asset retirement obligations is not shown on these pages?
That is correct. It's not a requirement for FERC reporting to include the reclassification of the non-legal obligation to a regulatory liability. This is a FERC report, it's not an SEC report.
Okay, hold on one second. If you could turn to the exhibit marked 761 for identification. Did the panel prepare the response to that interrogatory request from UIU?
Yes, we did.
Okay, and that is answered the same way you would answer today?
That is correct.
So retiree benefits is a funded liability, is that correct?
Yes, we have a separate pension fund and a separate fund for other post-employment benefits.
Okay, but in contrast, the non-legal AROs is not a funded liability.
With the exception of employee benefits, I'm not aware of any costs that are funded.
Okay. If you could just quickly turn to page 177 of the accounting panel's direct testimony. The electric. Yes.
Okay?
Okay, and there, at line 19, you're referring to what's described as internally generated cash?
That is correct.
Okay. And we would find the calculation of free cash flow for the period 2000 to 2012 in the Form 100 and annual reports. Is that where that would be located?
I'm not sure what you mean by free cash flow. There's different ways to define it.
Okay, I wanted to show you one final document. If you turn to page 2.
Excuse me, Your Honor, what is this?
This is a document that we prepared. We had some questions about whether the company agrees with some of the calculations on this document.
Perhaps you could help us out a little bit. How does this impact rate making?
Yes, if you turn to page 2, do you agree with the definition of net income on page 2?
How do you define net income? Are you talking amounts available for shareholders? Are you talking operating income from utility operations? How do you define net income in this context?
The former that you discussed regarding shareholders.
This is a definition. It's a very high level definition.
Do you have something specific you're going to get to? Because
Yes, I'm almost
it's
done
just
here.
going to be questions like that.
I'm almost done. If you turn to page 3, would you agree that a utility's accrual basis revenues minus its accrual basis expenses equal its accrual basis operating income?
You're talking about income from utility operations? We're not
Yeah.
talking about net income now. We're talking about operating income?
Yes.
This is missing federal income taxes, which would include interest deduction. So it would include some non-operating items as well, if this is utility operating income.
Okay, and turning page 4, does the utilities accrual basis operating expenses include both cash expenses and non-cash expenses?
The utilities operating expenses that are recorded on the books would include cash payments as well as accruals, yes.
Okay. And are the major non-cash expenses depreciation, amortization, and deferred taxes?
Yes.
So would you agree that an
You
example?
can get all this from the income statement. I don't see that there's a point to this.
It'll become clear later, I think, Your Honor.
Well, do you have?
I'm almost done. There's just I have two or three questions and I'll be done. Now, so the example on page 4, the non-cash expenses equal $450, is that correct?
That's what the illustration shows.
Okay, so do you agree that a utilities cash basis return is calculated by adding back non-cash expenses to the accrual basis returns?
I've never heard that term before, cash basis return.
Now, if you turn to page 7, of this document, these numbers are drawn from the company's annual FERC Form 1 filings. Would you agree that the data shows from 2001 to 2011, the company's accrual operating income was $12.7 billion, but the cash operating income was $22.7 billion?
Can you show me a report, or can I make this subject to check? I
It's
don't know.
subject to check.
Does counsel say that the witnesses will be able to find these figures in the reports you referenced, or these calculations that were made by you or you?
These are found in the company's FERC Form 1 report.
Thank you.
I'm not familiar with the term cash operating income. Can you explain what that is in the slide? I can't agree with that. That's not a number that would show up on the face of the financial statement.
That's all the questions I have, Your Honor.
Okay. I want to take a 5-minute break.
Oh, Your Honor, I forgot to ask that this document be marked for identification.
Yeah, I've got a real problem with this document. You asked some questions about it, I think they answered them, but I see so many problems with the value of this document that I feel like sua sponte, I should not allow it to be admitted.
Okay, Your Honor. We accept your,
I'd like to take a 5-minute break, and during the break, I'd like to have a brief council, one with Mr. Richter and one with Mr. Michaels. So we're off the record. Okay, why don't we get started marking the exhibits? I think enough have been handed out that we should be good to go. You don't need to report or something.
Okay, Judge, thank you.
Okay, we're back on the record. DPS staff, it's your turn.
Thank you, Your Honor. At this time, for the request of Your Honor, we are going to
Please use the microphone.
we are going to pre-mark exhibits, Your Honor, if I can walk everyone through them.
Okay. Could you give your name, please?
Yes, and good morning, panel. My name is Alan Michaels. I'll be asking you some questions once we line up all of these documents. So the first is a company work paper by the electric forecasting panel. After we all dance. It is a document that on the far left, it has years, and it has different, it has charts with numbers. Is that acceptable, Judge, as far as the description?
The heading is 2012 rate case total MFC revenues. It's one page, right?
Thank you.
We'll mark that exhibit 889 for identification.
Thank you. And the next is entitled Consolidated Edison Company of New York, case 09-E-0428, rate year 3, ending 3/31/2013, rate year 3, it's in quotes, RY 3. And there are double-sided 1, 2, 3, 4, 5, 6, 7 pages total to that.
Okay, that'll be marked exhibit 890 for identification.
Great, thank you. And the next, Your Honor, is entitled Consolidated Edison Company of New York, Inc., Financial Reporting, May 31st, 2013. And it is a total of 6 pages.
Okay, that'll be marked Exhibit 891 for identification.
Next, Your Honor, is has a letter from the company law department. It has letterhead, and it starts with...
It's dated June 7, 2013.
Yes, thank you.
And it's 4 pages altogether.
Yes, it is.
Okay, that'll be Exhibit 892 for identification.
The next, Judge, is a printout off the company's website. It is entitled ESCO News, produced by Con Edison for the energy service companies of Power Your Way. And it's dated April 30th, 2009.
Okay, that'll be Exhibit 893 for identification.
Sorry, Judge, that also had 3 pages. The next document is IR response to DPS set 1E032.
Okay, that'll be Exhibit 894 for identification. It's about an eighth of an inch thick.
Your Honor, I'd just like to note that this particular document says it was prepared by someone else.
I see that too. He's going to have to qualify things as he goes through his cross.
And Judge, I believe the last document in the grouping is entitled Consolidated Edison Company of New York, Inc., Medicare Part D deferral calculation.
Okay, that's a 1-page document of tables, which will be Exhibit 895 for identification.
Thank you very much.
But I have 1, 2, 3, 4 more documents I was handed.
And my stack is incomplete. Oh, Your Honor, these are all IRs. I have 3 IRs. One is a response to DPS set 73, question number 0719.
Okay, and that's a response by the accounting panel. And that'll be Exhibit 896 for identification.
The next one is another IR response from DPS set 72, question number 0715, supplement 2.
And on that one, it's not clear who the responding witness was. And it's 2 pages, even though it says page 1 of 3 on the first page. That'll be Exhibit 897 for identification.
Next, Your Honor, is interrogatory response to DPS set 73, question number 0720.
Okay, that's a response by the accounting panel. It'll be Exhibit 897 for identification.
898.
I'm sorry. You're right, 898, sorry. Let me make it to my sheet.
And I believe this is the last document I have, Your Honor, which is IR response to set 80 of DPS, question number 0774, responding witness, accounting panel.
And that'll be marked Exhibit 899 for identification.
Thank you, Your Honor.
Now, as you do your cross, you're going to have to explain what some of these things are and qualify the ones that you just want to get in as IRs.
Thank you, Judge. Understood. again, panel.
Good morning.
If you would please turn to page 49 of the electric update/rebuttal testimony. The company states that the level of credit and collection revenue the company can recover has been unbundled and is fully reconciled. Is that correct?
That is correct.
What is the total electric credit and collection target the company proposes in this case?
I don't know.
One moment, please. What is the rate year forecast of the merchant function charge of the CNC revenue? Correction, the collection and credit.
Could you repeat the question, please?
Sure. What is the rate year forecast of the merchant function charge of the credit and collection revenue?
Basing it on your exhibit 889, and I'm not sure if this is the company's final update or formal June update or a preliminary number. The third series of numbers is 2012 rate case credit and collection related revenues. It shows for 2014, $34,382,730. But again, I'm not sure at what point this was prepared.
Could you describe how many updates there were to this type of a document?
The numbers were updated in June as part of the company's June 21st update.
And this would be a company work paper, is that correct?
I'm assuming it's a company work paper. It's not marked anywhere on here that makes it up that it looks like something that, it's a forecast that breaks down merchant function charge revenues.
Are you familiar with the document?
I've never seen it before, but it makes sense to me.
Now, you mentioned there were documents that the company made that have been updated. Did they
The
look like-
company's electric sales panel updated its sales forecast. I'm not sure if these represent the final numbers that were included in the June update.
Thank you. Thanks for the clarification. Now, one minute, please. If I could. Your Honor, this time I'm going to turn to a document that's already in record. So I'm not requesting to have it marked. It is noted as Company Exhibit AP9 dated June 21st, 2013.
Sure.
Based on that AP9 as well as the the 889 that was for identification purposes, can you please verify the 34.382 million and change that you stated?
The top set of numbers shows on line 10, shows merchant function charge revenues of $65,311,000. Looking at your exhibit 889, second line, 2014, it shows total merchant function charge revenues of $65,811,000. I would agree with the same numbers.
Thank you, panel. And noting the 65.8 million number of the total, isn't it true that the 34.383 million is included in the 65 number?
There's a component of the $65 million.
Now, what was the total credit and collection revenue target established for rate year 3, which ended March 31st, 2013, of the expired rate plan in case 09-E-0428?
Based on Exhibit 890, for credit and collection activities, the target is $36,115,943.
Thank you. Now, are you familiar with the document identified as 890?
Yes, I am.
And what is that?
This is a work paper that was submitted to staff as an informal data request that asked for a breakdown of the merchant function charge targets included in the current rate plan.
Was that submitted to staff by the company?
Yes, it was.
Did you review it before it was submitted to staff?
I did review it, yes.
And does that document, the numbers 890 for identification, does that show the merchant function charge and the credit and collection target in rate year 3 is $36.116 million?
I think I just answered that, yes.
Turn your attention now, please, to what has been marked for identification as 891. Does that document look familiar to you?
Yes, it does.
And what is that?
It's also a work paper the company had submitted to staff informally.
And did this panel review that document prior to submitting it to staff?
Yes, we did. It represents a monthly reconciliation of actual merchant function charge recoveries to the targets that are included in the current rate plan or expired rate plan.
And does this document show the POR CNC target in rate year 3 as 13.737 million?
It shows that number on the third work paper, yes.
Thank you. What is the total rate year gas credit and collection revenue? So I'm sorry, I'm turning off this document. Away from that document, what is the total rate year gas credit and collection revenue target the company proposes in this rate case?
I don't know without looking at some back.
And what, are you aware what portion of the total is the company forecasting to be collected through merchant function charge?
I don't have that information in front of me, but you can point me to it and exhibit.
Your Honor, if I may approach the panel, I'm going to hand them what is already in an exhibit. It's company's exhibit AP9, schedule 1 of 9. Update. With the help of AP9 dated June 21st, 2013, schedule 1 of 9, does this document help show the merchant function charge?
Yes, lines 4 through 6 show the merchant function charge, the supply-related costs, credit and collections, uncollectible charges.
And what does it show?
Merchant function charge, supply-related forecasted costs are $6,811,000. Merchant function charge, credit and collections, recoveries will be $9,120,000. Merchant function charge, uncollectible charges of $9,667,000.
Sir, I'm just going to
I'm
ask.
sorry, lines 4, 5, and 6. I made them all.
Thank you. So I'm just going to ask you to correct me if I'm wrong. If I'm to look at this document, I see line 5, the MFC dash credits and collection is 9,667. Is that correct?
I would agree.
Thank you. Specifically, that's 9.667 million, correct?
Yes.
Thank you. And what portion of rate year total gas credit and collection revenue target is included in the company's forecast of POR revenues?
I don't have that information.
Thank you. If I could now turn your attention to page 50, line 15.
This is of our electric.
It is. Here, the panel is critical of staff's methodology. Is that correct?
We noted some inconsistencies in the manner in which staff projected POR revenues. That is correct.
So specifically, the panel thinks staff's method resulted in a POR discount revenues that was $9 million higher than actual book revenue for a 3-year period of July 1st, 2009 through June 30th, 2012. Is that correct?
That is correct.
Panel, I'm going to turn your attention to what has been previously marked for identification as document number 892. Does this document look familiar to you? This is one that has letterhead and starts with a letter from the company.
Yes, this was staff's response to the company IR that was sent out at the time we were preparing our rebuttal testimony.
This is actually a
This was our question.
company request to staff. Is that correct?
That is correct.
Now, there is an attachment to this document. Is that correct?
That is correct. Page 3.
And 4 for that matter, too. Now, upon review of that attachment, did the panel prepare that?
Yes.
Did you rely in part upon your analysis provided in response to DPS 105 to determine staff's overstatement? I'm sorry, not your response. Let me rephrase. Did you rely in part upon your analysis provided in that attachment to DP 105 to determine staff's overstatement?
Is that response in this package that we want?
So it is the document 892, and it's actually not a response, it's a request. It was my fault. I apologize for the confusion. So there is an attachment. I'm asking the panel if they relied in part on their analysis that they provided in 892 to determine staff's overstatement.
I'm sorry, could you repeat your question?
Sure. So using what has been marked as 892, the attachment, the 2 pages, did this panel rely in part upon that analysis that's provided in that attachment to determine staff's overstatement that's allegedly $9 million higher than actual book value for the 3-year period?
In part.
And in your analysis, isn't it true you relied on the discount rate in effect at the end of the 12-month period for each of the 3 years analyzed?
For purposes of this IR?
When you made your analysis,
For purposes of this IR, we relied on the current rates that were in effect.
the current, that were in effect at
That
the
were in
time?
effect at those times, yes.
And is that the same information you used when you made your analysis that staff was $9 million higher than actual book revenue?
Again, it's only in part the reason we believe that staff's numbers are overstated. There's really the POR revenues billed to marketers are to recover the company's credit and collection costs. Those amounts are determined base rates. And it's also to recover uncollectible charges associated with customers that receive service through ESCO.
And panel, during each of these 3 12-month periods, did the company apply the same discount rate to purchased accounts receivable when billing the ESCOs?
You're talking about the historic periods?
Yes, that's
that are
correct.
included. No, I guess the rates were updated semi-annually.
But was that then in January and June, something like that?
I don't recall which months.
And generally, the rate in effect at the end of a 12-month period is the highest, is that correct?
Not necessarily. That's not true. It's based on the company's actual collectible experience for that period of time. We update the actual rates. Current rates have dropped prior periods.
And panel, I'm going to turn your attention now, please, to what has been marked previously as 893 for identification. It's entitled ESCO News, dated April 30th, 2009. There's a total of 3 ESCO News in this identified document. Do you see that?
Yes, I do.
3 separate dates, is that correct?
Yes.
And what are these? Are you familiar with them?
It's a newsletter that I know it indicates what the POR rates to be in effect would be. The title says Purchase of Accounts Receivable POR Discount Rates, and it indicates the effective date. The first document indicates it's effective May 1st, 2009. The second document doesn't indicate the date, an effective date, but it says 2011 POR rate. The third document says 2011 POR rate effective October 1st, 2011.
Do you know where the public can find these documents?
Well, this is really geared more towards the marketers, suppliers. These are rates the company would charge the marketers, not the customers. I'm not sure, it's somewhere on our website.
So it's on the company's website?
It says at the bottom of the first page, retail access at conedison.com.
And specifically, you mentioned that the letters establish the POR rate the company uses at that time. Is that correct?
It's my understanding.
And is it the POR rate the company actually bills the ESCOs participating in POR at that time?
That's my understanding, yes.
Thank you. Turn your attention now, please, to page 74 of your electric rebuttal testimony, or 44 of your gas, or 45 of your steam. Within that testimony, the panel addresses the company's current employee headcount. Is that correct?
That's correct.
And included in the company's initial filings, the company identified as program changes a request for 86 new employees. Is that correct?
That is correct.
Approximately 44 of those positions have been accounted for through either hiring or contracts on or by December 31st, 2012. Is that correct?
Yes.
And in its June 21st update, the company supplemented its employee request, seeking 22 additional new hires. Is that correct?
There were 2 employees that were missed in our original filing related to substation department. I'm not sure if it's any 20. There were some program changes requested related to cybersecurity. Yes, we did supplement for 22 employees.
And in addition to cybersecurity, there were some other areas that were also updated to include additional employee requests. Is that correct?
I believe so, yes.
Do you know how many of the approximate 66 requested positions were filled through hire or contract between January 2013 and April 2013?
I don't have that information with me.
Do you have that available to you?
We can provide it, transfer.
Your Honor, at this time, we would request that information.
That's January through June.
January 2013 through, yes, June 1st, 2013. Thank you very much.
All right, we'll consider that a transcript request.
Thank you, Judge.
January through June.
And turn your attention, please, to page 78 of your electric rebuttal testimony, or 51 of gas, or 49 of steam. The panel indicates that the labor capitalization rate used by staff understated the amount of labor costs that were capitalized, deferred, or billed third parties. Is that correct?
Staff's adjustment in their exhibit SAP 1, SAP 2, and SAP 3, calculating their adjustment for lower staffing, they used a different capital expense mix than the company actually had during the historic test year. Yes.
And the labor capitalization rate used by the company the labor capitalization rate is used by the company to compute the amount of pension, including OPEBs, payroll taxes, and other fringe benefits, such as health insurance, that are capitalized. Is that correct?
It's based on actual amounts capitalized or billed to third parties. We do not defer or capitalize amounts. We do not reduce health care or pension expense for payroll costs that would be deferred. For example, the cost incurred, incremental overtime incurred during Superstorm Sandy. We did not defer or capitalize any of those fringe benefit costs. We would charge those to expense.
The labor capitalization rate is based on the ratio of labor content of capital costs to total company labor costs. Is that correct?
it's not just capitalized labor, it includes amounts billed to third parties and amounts deferred.
Okay, thank you. And based on this information, shouldn't fringe benefits such as pension, OPEBs, payroll taxes, and health insurance track labor dollars? In other words, for every labor dollar that is capitalized, deferred, or billed to third parties, the payroll-related costs and fringe benefits associated with that labor should also be capitalized, deferred, or billed to third parties. Is that correct?
The company does capitalize, and the company does recognize amounts capitalized and billed to third parties as a reduction to its pension costs and to its healthcare costs. We do not reduce our pension expense or OPEB expense for payroll costs that are deferred.
Thank you. Doesn't the panel indicate that in the historic test year, 47% of all labor costs were capitalized, deferred, or billed to third parties?
That's what's shown in our exhibits, yes.
And if I could please turn your attention to what has been previously marked for identification as 894. It is a response to an IR entitled E032. Do you see that?
Yes, I do.
Are you familiar with this document?
Your Honor, I'd like to note that this was prepared by a different witness.
I understand. Thank you.
Yes, we're familiar with this report.
Based on the monthly distribution of company payroll reports, what is the amount of labor that was capitalized in the historic test year?
Could you give us a hint?
Your Honor, for reference, I'm going to hand the panel a worksheet from staff, which may assist in the quick math.
Based on staff's worksheet, it shows that 55% payroll was charged to O&M expense, 33% was charged to capital. In the lower right-hand corner of the worksheet.
Thank you. And does that comport with information that is in what has been marked for ID as 894?
I see the same totals at the bottom of the page. I assume the math is done correctly.
And do you see what is the amount billed to third parties?
What document?
On staff's worksheet would be entitled Other in the summary area.
based on the worksheet, it's showing a number of 3.54%.
And that includes the amount billed to third parties, is that correct?
Work in progress, things that could be billed to third parties.
Does that number also comport with the document identified as 894?
Yes.
And what is the approximate amount deferred?
This doesn't really show.
If I could turn your attention to miscellaneous deferred credits, which is the last line of the worksheet on the second page, prior to whole, is it approximately 1%? I see 0.78, is that correct?
I would agree.
And does that also comport with 894?
Yes.
And what is the amount related to plant retirements?
Approximately 7%.
Does that 7% also comport with the information in 894?
Yes.
If the amount of labor that was capitalized deferred billed to third parties, I'm sorry, let me start again. If the amount of labor that was capitalized deferred billed to third parties and the amount related to plant retirements total 45%, can you explain the difference between the 45% and the 47% that's indicated in your testimony?
This report that you're relying on, GA 109, is a statistical report. It doesn't actually track payroll through the company's accounting system, the old accounting system, because we did not have a separate labor identifier. For purposes of the rate filing, we actually go back and rerun the allocations to determine the actual level of payroll that was charged to expense. So then this was more of a statistical analysis to get you close to the answer, but not the exact answer.
Now, again, the company is seeking funding for new employees related to its proposed program changes. Is that correct?
That is correct.
What portion of the payroll dollars associated with these new employees was allocated to capital deferred billed to third parties or was related to plant retirements?
Each of the program changes specifies the amount that's applicable to each service, and whether a portion of it was capital or not. So it depends on the particular program, whether and what the function of the employee would be.
And where would that be found then?
It was the original filing included that exhibit AP, our exhibit AP5, I believe it was Schedule 6.
Now, noting Schedule 6, is it fair to say that 100% of the payroll dollars associated with these new employees was allocated to either capital deferred billed to third parties or was related to plant retirements?
I believe so, yes.
Panel, I'm sorry, I think I had you confused. It's not 100% billed to third parties, it's 100% expensed. Is that correct?
Depending on the nature of the work that the employee would do, it could be 100% to expense, yes.
I'm going to turn your attention, please, to AP5 Schedule 6. Do you have that document? This one?
For electric,
Yes, please.
Yeah, I do not have that particular schedule with AP5.
AP5 Schedule 6. You got that? Mary has something.
Panel, do you have the document now noted as AP5, Schedule 6?
Yes, I do.
And would you look, please, under the first column entitled Labor? Do you see that?
Yes.
Your Honor, I'd like to note for the record that the exhibit designation on what was handed out doesn't match to what I have.
You guys just revise or supplemented the document later on, and that's what we got. As a supplement. No, not. Okay.
It should have been as the original filing was missed. It was sent out afterwards. We sent a separate letter. Supplement. Schedule was missing from the original bound copy.
Imagine how I feel.
I'm also going to turn your attention, please, to AP5, Schedule 1. Please allow me to hand you a copy. Now, in comparing these two documents, do you see that the total under labor program changes? Okay, there is no total. If you were to total it up, would it equate to the total under program changes of AP5 Schedule 1?
Under the category of company labor and company labor, electric operations, STO, SSO, lines 17 and 18, I believe that's correct.
And according to AP5 Schedule 1, the company expensed 100% of the labor dollars associated with program changes that are requesting additional employees. Is that correct?
Based on these particular program changes, they are all expense, yes.
Thank you, panel. Now turning your attention, please, to page 54 of your electric rebuttal testimony. The panel states, clearly, had the sale price of the property been less than the net market value of the property in 1996, when the property was transferred to a non-plant utility account, staff would have advocated that shareholders, not ratepayers, bear the entire cost of the property while it was held in a non-utility plant account. Is that a fair read of your testimony?
This is referring to the John Street property? Yes, we agree.
And what is the basis of the statement?
The property was transferred to non-utility plant primarily as a result of the divestiture. The company has borne the cost of the investment since 1996. We don't believe that staff's proposed treatment of the allocation of the funds is equitable to the company's shareholders. It does not provide for recovery of property taxes paid by the company. It's just inequitable.
And did anyone on this panel speak to staff about what it would have advocated?
I did reach out to staff to discuss with them, and I was told it would be addressed in their testimony.
Your Honor, at this time, staff would move to strike that this statement is purely speculative. There's no basis for an opinion of what staff would have done in this situation.
All I said is they would address it in testimony.
If you want to object to testimony or exhibits, you have to do it in writing after the close of the hearing.
Thank you, Judge. Panel, turning your attention, please, to pages 64 to 66 of your steam rebuttal testimony. The panel discusses a manufacturing tax deduction that was included in the company's March 25th steam update. Is that correct?
That is correct.
And what is this tax deduction?
The company was able to, and reflected in its 2005 steam rate case, a deduction, flow-through tax deduction for the benefit of customers related to manufacturing of steam. As a result of bonus depreciation and tax law changes that occurred subsequent to that in 2009 and 2010, in order to get a bigger tax benefit for customers, since we had a tax loss in those years, we carried the tax loss back to 2007 and 2008. By doing that, we lost the deduction that we had previously claimed. So what we're requesting in this case is that since we generated almost $400 million of cash flow benefits for customers that have a value of, a significant value of about $20 million, that we'd be allowed to recover the lost deduction. That's what we are seeking.
Now, did this tax deduction originate in 2005 and 6?
It originated earlier.
At some point, did the company amend its federal tax return to include this earlier tax deduction?
We amended it. We amended the prior years in 2009 to go back and eliminate the tax deduction in order to get additional bonus depreciation benefits for customers.
Between now and the time the company amended its tax return, did the company request recovery from the Public Service Commission?
Can you repeat the question?
Sure. Between now and the time the company amended its tax return, did the company request recovery from the Public Service Commission?
We realized in March of this year that when we filed our amended returns that we lost the tax deduction. We included it as part of our update in order to try and recover this cost, which we previously given customers the benefit of.
Now, this tax deduction wasn't reflected in the company's originally filed 2013 rate case, was it?
No, because it applied to prior years. Again, we did not amend the tax return for those tax years until after we applied. We weren't aware that we had lost the deduction.
So how did it find its way into this rate case?
We were reviewing the bonus depreciation. Our tax department was reviewing its tax calculations for prior years that were recorded, and they determined that they would have to record an entry in 2012 and 2013 to reflect the loss of this tax deduction. Again, we went back and amended the returns in order to get a carry forward, in order to take advantage of the tax losses that we had resulting from bonus depreciation. We went back and amended our returns so we get the cash return.
But this pre-2005, 2006 tax deduction wasn't new information, was it?
It was new to me, yes.
But to you as an individual, was it to the company?
It was not recognized until the first quarter of this year.
What do you mean by recognized?
It's when it came to light.
There was no new information that the company acquired from the IRS, was there?
The tax returns for most years are still open. It's one of these things where we'll go back and amend it, and it takes a while to work through the process.
But there was no new information from the IRS, was there?
The IRS, no, there was.
Yes, there was. Mr. Miller, please explain.
My understanding, there was no information in the first quarter of this year.
And what's your, I'm sorry, I just lost my thought. What is your, you said it's my understanding, what is that from?
Based on conversations with the tax department.
From the tax department?
Tax department.
And that's of the company?
Of the company, correct.
So your internal discussions led you to a conclusion that the company received new information, is that correct?
That's correct.
Are you aware of what that new information is?
With respect to the loss of the manufacturing tax deduction based on analysis of our booked balances for deferred taxes and the analysis of our tax returns and discussions with the IRS, that came to light in the first quarter of this year.
Can you describe what you mean by it came to light?
That's information that became available to the tax department in the first quarter of this year.
And you're not aware, I'm guessing, since you're not a member of the tax department, is that fair to say?
That's correct.
So I'm betting you also are not aware of how the information came to the tax department, is that fair to say?
That's correct.
Is this
Just to add, it had been known, the company would have reported this in calendar 2012.
So this was raised in the rate case by what? What brought it to our attention today?
Again, in reviewing the impact of carrying back tax losses the company had as a result of bonus depreciation, the company amended its returns, it lost tax deductions as previously reported. As a result, in sitting now at our tax department in the first quarter of the year, we determined what to do with this lost deduction. It had an impact on earnings. It was part of the prior rate plan. It's something we lost in order to get a benefit for customers. We amended the returns, and it resulted in a tax benefits of $400 million. So our view is that in order to get a $400 million cash flow benefit, we gave up the manufacturing deduction. We thought that was a reasonable price that customers should pay.
But so to bring it here today, it was added to this case as an update, is that correct?
That is correct, based on the information we had in March.
But you don't know what that new information was, is that right? That's from the tax department?
Again, there was a realization that there was an issue related to those prior years. This ties to tax law changes that were enacted by the IRS that allowed us to carry back tax losses for 5 years. That was not the situation in our case. There used to be a 2-year limitation of carrying back tax losses. That was a one-time event.
Understood, but when you say new information, are you telling me that new information was provided to the company, or that there was an aha moment while someone in the company conducted
Objection to the
an
characterization,
audit?
Your Honor.
Okay, allow me to rephrase that then, Judge. I perfectly understand, counsel. Apologize. You mentioned, panel, that there was new information. So was that new information that came from outside the company, or was it someone within the company conducted a routine audit or inspection or review of materials that the company has in its possession and realized this incident, this issue?
I believe based on the year-end audit, this is how the information came to light.
Can you please describe a year-end audit for me?
The company has outside independent auditors that review its transactions. Based on the audit, based on the analysis done by the tax department to determine that there was an expense that needed to be, an adjustment that needed to be recorded for the lost tax deduction.
Now, these outside auditors, what is it that they utilize to conduct their audit? Do they use information from within inside the company?
They rely on the company's books and records, and they also do independent testing.
Now, turn your attention please to pages 65 to 66 of your STEAM testimony. The panel indicates that due to tax law changes, the company elected to take bonus depreciation on its federal tax return in 2009. Is that correct?
That is correct.
The panel further indicates that the decision to take bonus depreciation resulted in a federal tax loss that was carried back to earlier years, correct?
Yes, the company opted to amend its prior returns to take the tax losses in earlier years. It was allowed a one-time 5-year carryback. The company took advantage of that in order to get cash flow benefits for its customers.
So the company, did the company voluntarily choose to amend its tax returns in the periods that coincided with the rate plan established in case 05-S-1376?
Yes, it did.
Did the company defer on its books the difference between the actual tax benefit related to the manufacturing deduction realized by the company and the tax benefits reflected in rates?
As part of that rate plan, no, there was no true-up provision. There was a flow-through tax deduction that was built into the rate plan, and we took the actual deduction on the books. There was actually a higher deduction built into rates than we actually recognized on the books.
Panel, how about at any time?
It's been treated as a flow-through tax deduction. There is no true-up or reconciliation of the actual deduction the company was able to take. But again, the purpose for including in this filing was not that we wanted to get back money that was included in the 2005 rate plan. It's because we opted to take bonus depreciation as part of the current rate plan. In order to give customers that benefit, we went back and amended the returns. And had we known that we would not be allowed to recover this cost, I mean, that certainly serves as a disincentive for the company to be aggressive and try and amend its returns.
Thank you, Panel. If I could please turn your attention to page 24 of your electric rebuttal testimony, or 16 of your gas, or 16 of steam. The panel discusses its update to the Medicare Part D deferral calculation. Is that correct?
Yes.
And this deferral represents the company's proposal to recover the shortfall for the difference between its actual tax Medicare Part D tax benefits received and the Medicare Part D tax benefits reflected in rates. Is that correct?
That was the number we calculated at that time, yes.
According to your testimony, your rebuttal testimony, the update reflects corrections to the Medicare Part D deferral calculation for prior Medicare Part D tax deductions and the amortization of deferred credits and charges associated with the Medicare Part D subsidy that were not reflected in the company's original testimony. Is that correct?
Based on information that we worked up at that time, yes.
Has the company provided staff a revised calculation for consideration?
Yes,
That,
Exhibit 895.
thank you. And just so I can finish the question, that materially increases the Medicare Part D deferral calculation subsequent to the June 21st update.
Yes,
And what is that?
Exhibit 895.
Thank you very much. And when did the company provide this to staff?
This was provided to staff last week.
So that was roughly when hearings began, is that correct?
I believe so, yes.
According to this revised document noted as 895 for identification, the company excluded tax benefits received in 2004 and a portion received in 2005. Is that correct?
The company was operating under rate plans for electric, gas, and steam at those points in time that had new laws provisions that excluded tax law changes that were under a certain threshold. This calculation recognized that benefits received in 2004 for electric were underneath that threshold. For gas and steam, the rate plan that went into effect in October 2005 did recognize and reflect the Medicare Part D deduction, so we excluded the first 9 months of that tax year for gas and steam.
So, based on that information, the company excluded tax benefits received in 2004 and a portion received in 2005. Is that correct?
For electric, yes.
For electric. Didn't the company include in the updated reconciliation all the amounts reflected in the rate plans from 2004 to the present?
There were errors in those calculations that I noted when I reviewed them.
And panel, are you referring to errors in this most recent document noted as 895 or a prior document?
Prior documents. Part of the confusion was whether amounts passed back to customers were calculated on a pre-tax basis or an after-tax basis.
Okay, so based on 895, did the company include updated reconciliation of all the amounts reflected in the rate plans from 2004 to the present?
Yes.
If I could direct your attention to the section that is entitled Amounts Reflected in Rate Plans on Pre-Tax Basis. Do you see that?
Yes, I do.
Specifically, lines labeled gas deductions and steam deductions and targets. What do these lines represent?
They represent amounts included in those rate plans. Those were 2-year rate. The steam rate plan was a 2-year rate plan. The electric rate plan was a 3-year rate plan. Those represent amounts that the company included, or that were adopted in joint proposals in those cases as reductions to pension expense related to Medicare Part D.
And that's adjustments, I'm sorry, what you just stated, those are adjustments to O&M, is that correct?
They were shown as reductions in O&M expense in the exhibit.
The adjustments to O&M expense and rate plans, I'm sorry, do the pension and OPEB true-up targets in those rate plans reflect those adjustments? Well, let's break them down. How about electric?
There's 2 components in electric. One is an amortization of other operating revenues. It's shown as electric amortization of prior period deferrals, and then there's there's something called electric deduction included in the targets.
But the true-up targets in those rate plans, specifically in the appendices, do you see if those adjustments are reflected?
I don't have those appendices with me.
Have you already captured these amounts in the deferral?
I don't believe so.
Okay, how about for gas or steam?
I don't believe so.
Thank you. If I could turn your attention, please, to page 61 of your electric rebuttal testimony, line 11. You state, there can be no question that had the litigation been resolved in the company's favor with a substantial award of damages, as had been expected by staff and the company, staff would not have opposed recovery by the company of the costs incurred to obtain that award, unless, of course, staff's position is that the silence of the JP on the SNF litigation would have entitled the company to retain all of the damages recovered from the DOE in the litigation. We doubt that staff would ever advocate for such a position. Would ever advocate such a position. Is that a correct read of your testimony?
Yes, it is.
Let's break this down. There's a comment that is, as had been expected by staff. Do you know that staff was expecting this?
To be successful in litigation? Yes,
And how do you know that?
based on discussions with staff.
And staff would not have opposed recovery by the company? How are you aware of that?
Based on past practice.
Did you speak to anyone about this instance on staff who gave you their opinion regarding that?
Yes. Part of the filing was that we filed for, in the 2009 case, we filed for, we requested outside legal and other professional expenditures based on the 3-year average of actual amounts incurred. Staff eliminated from our 3-year average the legal fees associated with spent nuclear fuel, with the understanding that once the case was settled, they said we were premature, that we would recover those costs. That was the understanding.
Was this understanding written down?
Apparently not. That's why we're here today.
Now, after, I'm sorry, what year was that? Does that matter? 09?
This matter had gone on for a number of years.
It has concluded, is that correct?
It was concluded, I think, in 2010.
So, subsequent to the matter that concluded somewhere around 2010, was this raised as an issue with staff?
Periodically in rate cases, yes.
And was that communication in any way in writing?
To be honest, I don't recall.
Turn your attention, please, to page 62, starting on line 5 of your rebuttal. You state, issues deferred for consideration are not typically addressed in such a JP. Is that a correct read of your testimony?
Yes, it is.
Are you familiar with page 25 of the current STEAM JP, section J.4, concerning the Astoria consent order?
I'm vaguely aware that there was an issue at that time, the joint proposal. Don't recall the details.
Are you aware that the GP resolved the issue by directing the company to defer to the extent required facilities are placed into service during the 3-year rate plan, the customer's share of such costs, provided that the company's capital expenditures related to any such facilities result in amounts exceeding the level reflected in rates?
I think that was a different situation. That was prospective. This is retroactive. We had included in our request in the last case actual expenditures, the 3-year average. And they were disallowed with the understanding that once the case was settled, we would recover those costs. And this, what you're referring to as far as the Astoria consent order, that had to do with future spending.
Thank you. Again, turn your attention to the same page, which was 62 of the electric rebuttal testimony, line 16. You state the company requests recovery of the amount deferred in the last electric rate proceeding for later, plus subsequent 2009 and 2010 costs, less the amount recovered from DOE. Is that a correct read of your testimony?
Yes.
When the panel uses the term deferred in this statement, doesn't the panel really mean the amount not reflected in that rate proceeding?
I would agree.
The company hasn't actually deferred the amount noted in the quote from your rebuttal testimony, has it?
No, it is not.
If I could please turn your attention to page 94 of your electric rebuttal testimony. Panel states that staff appears to have disregarded information as the effect of the workers' compensation law changes on the company as provided to staff. Is that a correct read of your testimony?
Yes, it is.
Was the information that the company provided to staff based on the company's interpretation of the announced law change or based on new state regulations?
It was based on information provided by a consultant that had reviewed the legislation, and basically what it indicated is that the company was paying the minimum workers' comp amounts currently. The tax law changes or the law changes related to workers' comp really impacted companies that were paying more than the minimum amounts.
So are you aware whether the New York State Workers' Compensation Board has released final regulations relating to this issue?
I am not aware.
If they do release final regulations, do you traditionally receive them?
The company would receive them. I assume the company would receive them, yes.
If I could turn your attention, please, to page 18 of your electric rebuttal testimony. You mentioned property tax refunds passed back to the company's customers in the rate year. Is that correct?
Yes, that's correct.
Are you aware of any other tax refunds not reflected in your filings or updates that the company expects to receive before the commission takes its final determination in this rate proceeding?
Yes, I am.
And what are those?
This
Excuse me, Your Honor, we had anticipated Mr. Musso addressing this section.
He has not yet taken the stand yet, Judge.
Later today.
I don't have a problem waiting, but could we see what this panel knows of it? I don't mind a general answer. Thank you.
No objection, Your Honor.
The company and the city of New York have reached a settlement agreement related to some prior vested generating plants, and that's an avenue that was resulted in a property tax refund of $140 million before a gross property tax refund of $140 million. We would expect to receive that within the next 2 to 3 weeks, and the company still.
Excuse me, just for clarification, that amount was received last week, at the end of last week.
Thank you for the clarification.
The company's in the process of preparing a petition to submit to the commission.
Thank you, panel. If you would please turn your attention to your electric rebuttal testimony, page 31, or 22 for gas or 22 for steam. The panel mentions an increase in the interference costs due to a shift in overhead costs from capital to O&M by a total of $7.5 million for the 3 combined services. Is that correct?
Yes.
What did the company provide to support its claim for the shift?
I believe one of the exhibits that you included in your handouts was a response that the company had submitted.
If I could turn your attention to the company response to DPS 719, which has been previously marked. I have it as 896. You see that document, panel?
Yes, I do.
And having reviewed that, does that support the company's claim to the shift?
Yes.
Can you please explain?
Yes, the company's construction management department oversees work done for interference and also for new construction projects. As a result of an increase in the amount of interference work allocated to expense, there was a shift in the amount, the way the overheads would flow between capital and expense.
Now, this document marked as 896. Did this panel prepare the response to the IR?
Yes.
And did it also prepare the attachments?
Yes, with the assistance of the interference department and the construction management department.
On the first page of the attachment, the top part shows the net costs for the Public Improvement Department, I believe it's PI, in the amount of $37.097 million. And the costs for construction management, CM, in the amounts of $64.865 million. Is that correct?
Yes.
Total overhead costs are rounded to $102 million. Is that correct?
That is correct.
What is the nature of the total overheads rounded to $102 million by element of cost?
I wouldn't know offhand. I assume that most of it is detailed actually on the second page. It's broken down between direct labor, indirect labor, and other departmental costs.
I see, if I'm looking at the same, I'm looking at what is page 4 of the total document. I guess it would be page 2 of the attachment. The first line says public improvement O&M. Is that correct? You see that?
That's for the public improvement department, yes.
And now, is this the document to which you were referring?
I was confused.
No, it's okay. I just want to follow you. Is that correct?
This is showing the direct allocation of costs between capital and expense. Breakdown for the departments.
And within this breakdown, does it break down the overheads?
No, it does not.
So, are you aware of any document that does break down the overheads?
It's discussed in the accounting procedure that's attached.
And can you please describe where and what it states with regards to the breakdown of the overheads?
The procedure just talks about the allocation of the overheads. It does not talk about the breakdown of the overheads. It's primarily the cost of the construction management department for oversight of capital projects and public improvement projects. So it includes labor and other departmental expenses.
So within this document, 896, there is no full breakdown of the overheads, is that correct?
That is correct.
Is there a document that breaks down the overheads?
We could provide an analysis of the actual charges that make up the overhead.
That would be helpful. Could you please explain what is the function of the construction management department?
They oversee construction projects and public improvement projects. A lot of the work is done by contractors. Their job is to go out in the field and inspect the work that's done by company forces and third parties.
Do they also oversee O&M capital projects for the entire company? Or only the interface capital and O&M projects? I'm sorry, interference capital and O&M projects.
I'm not sure what the scope of their, how much they encompass, and there's other areas of the company. I don't think they get, I'm not sure if they're involved, for example, in production projects. But generally, things that are done in the field, I believe they do review and manage.
So generally all capital and O&M projects?
It wouldn't include things like general plan, but primarily T&D projects, I believe they have the oversight responsibility.
And that would be for the entire company or only the interference capital and O&M?
It's primarily all T&D type of projects. Interference is a subset.
So that's, I apologize for my lawyer terms. So that would be the entire company, is that correct? Instead of
For that type of
subset?
yes.
Thank you. Does the $64.865 million construction management cost represent the cost for the entire construction management department?
I'm not sure. I don't really know the answer.
In the middle section of the page where it is labeled direct spending, do the numbers for test year capital / expense mix and rate year capital / expense mix represent the company's interference capital and O&M costs?
That's my understanding, yes.
Can you point out on this document the source of these amounts in the company's filing?
This analysis was provided by our construction management group.
Okay. So you don't have that information?
Not with me.
Excuse me 1 second. Now, panel, in the next section titled Overhead Split, indicates historic split of the overhead between O&M and the capital. I'm sorry, and capital. The total is $102 million. Is that correct?
You're still on page 3 of the document?
Yes, I am.
Yes.
And is it correct that these O&M and capital costs are reflected in the historic year cost of service elements?
That's what the sheet says, yes.
And where is that?
accounting panel exhibit 8P5, Schedule 1, has a line called interference expense for electric, gas, and steam. Those amounts should be reflected in the total of those 3 lines, so we hope that they do tie into these numbers.
Great, thank you. Now, turn your attention to the second page of the attachment. The section under the heading Public Improvement O&M represent the company's interference O&M expense.
That's what this is labeled. The labor portion of this expense would not be categorized by the company as interference. We only categorize the accounts payable portion as interference.
We do have a
Purposes of
different
doing a reconciliation.
reconciliation. Your Honor, if I can again present to the panel something that is already public record from case number 13-E-0030. It's their own rebuttal testimony, Judge, and it's municipal infrastructure panel's testimony. If I can give you 2 pages. So it's page 4, Judge.
Mr. Michaels, can you tell me how much more you have? Because you've already gone 20 minutes past your estimate.
Probably less than 10 minutes.
Okay.
I'm hoping to, Judge. Okay. Okay.
Pages 2 and 4 of the testimony will speak for themselves.
Yeah, that's correct, Counsel. I actually only handed them page 4, so I apologize if I confused you with that. If I can just turn your attention to that. First to the attachment to the IR 719. If you would please look to the top states capital improvement O&M. Do you see that page? I think it's the second page of the attachment. Do you have that page? And under public improvement capital, under O&M first, up at the top. Do you see what the PI O&M is, the total?
Are you referring to the $115,112,000? I'm not sure what number you're referring to.
I'm sorry, it is under the June update FY14, and correct me if I'm wrong, I see 137,522. Do you see that?
Yes.
And removing the labor line of 8,402, you would have roughly 129 million, is that correct?
Yes.
I'm sorry, it's 8 million, not 8,000. Okay, so 129 million. If you would please turn your attention to the municipal infrastructure's panel's chart on page 4 of their rebuttal testimony. correct me if I'm wrong, but do the numbers from IR 719 that's been noted as 96, do those numbers comport with their chart?
I'm not sure whether they included overheads.
So using their chart that's listed as electric, gas, steam, you don't know if those tallies include overhead, is that correct?
That is correct. I think these are direct costs.
I'm sorry.
I believe these are direct costs excluding.
And if that's the case, do the numbers comport with one another?
I would hope so.
Okay. 1 minute, please, Judge. You can save time. Judge, if I can, just the remaining documents that have been presented to the panel, I have identified as 897, which is supplement 2 to IR 715. Identified 898, which is IR 720. And identification number 899, which is question number IR 0774. Panel, do you have those 3 documents?
Yes, we do.
Are you familiar with, let's start with 897.
Yes, we prepared this.
Thank you. And how about 898?
We prepared this response as well.
And 899?
This was prepared by the county panel.
Which is you, is that correct?
That is correct.
And since the preparation of these 3 documents, have you had a need to amend them?
Document 897 includes information for June 2013 as the most current information available.
Thank you. Okay, lastly, if I could please turn your attention to page 85 of your rebuttal testimony of electric. The panel begins its discussion on the company's institutional dues and subscriptions expenditures. Is that correct?
That is correct.
On page 90, line 13, panel states that the company will update its rate request to eliminate the cost for corporate memberships. Is that correct?
That is correct.
And on line 15 of the same page, panel states that the company is requesting that the cost for memberships to professional organizations and economic development organizations continue to be included in its rate request. Is that correct?
That is correct.
On page 89, line 6 of this panel's rebuttal electric testimony, the company states that business and local economic development organizations are primarily chambers of commerce and similar organizations that are just dedicated to the constant growth and renewal of New York peoples, business, and communities. Is that correct?
That is correct.
Will the panel explain how the contributions to economic development organizations benefit customers more than the company?
Yes. The company has a revenue coupling mechanism in both electric and gas. So any additional revenues or any additional generation of business in the city of New York will benefit customers in the long run. Any additional revenues that would be gained through economic development projects, it's healthy for the city, but also any additional revenues would be deferred for the benefit of customers.
And how do the contributions ensure or improve utility services for its customers?
they're not contributions, they're memberships or dues that are paid by the company. But the company deals with a lot of small businesses. You know, we have representatives on what would be a Chamber of Commerce. They're dealing with members of the community to try and deal with their problems up front. For small businesses.
Thank you very much, panel. Appreciate your time. And thank you, Judge. Staff has nothing further at this time for this panel.
Okay, that ends the cross-examination for this panel. Is there any redirect?
We need a moment, please. No redirect, Your Honor.
Thank you for your testimony. The panel is excused. Please call the next witness.
Your Honor, Ken Edison calls the Shared Services panel. Your Honor, now that the panel is seated, I will note two things. Dr. Michelle Alexander, who was the initial witness on this panel, is lucky enough to be at a conference in Toronto. So in her place, Dr. Daria Luisi will answer any questions regarding medical and occupational health, and Mr. Jim Quackenbush will answer any questions related to HR programs that were included in the company's initial and rebuttal update filings. Does the panel submitted some corrections, I think back on Friday, July 19th. Other than that, I don't believe the panel has any subsequent corrections. Is that correct? With that, I guess you were supposed to swear me first. I think I messed it up. I'm sorry, Ron.
If you could all please stand and raise your right hands. Do you swear or affirm that the testimony you're about to give will be the truth, the whole truth, and nothing but the truth?
Yes.
And does the panel as currently constituted adopt the pre-filed testimony of the panel as its sworn testimony in these proceedings? Thank you. You may be seated. New York City for 20 minutes.
Thank you, Your Honor. Good afternoon, panel. My name is Kevin Lang. I'm an attorney for the City of New York. And I have a few questions for you this afternoon. I would ask if you don't understand any of my questions or you'd like me to restate them, please just let me know that, and I would be happy to do so. Okay? Also, the hearing today is being tape recorded, so I just saw a few people nodding. You actually need to speak into one of the microphones for the tape to pick it up. Turning to your rebuttal testimony at page 6, the panel discusses the need to hire a consultant to determine what it needs to do to harden its system. The panel familiar with this testimony?
Yes, I am.
No.
You have to speak into the microphone and very loud, please. Bring it right up to your face.
Now, this company has already proposed a $1 billion storm hardening program. Are the projects that this panel is contemplating part of that $1 billion, or are they going to be incremental to it?
I believe they're going to be incremental to it.
The company was able, in a period of less than 2 months, with the help from what we understand is no outside consultants, to develop this $1 billion incremental program. With respect to the buildings that this panel is referring to, why is it you need a consultant when the rest of the company did not need a consultant to identify what is needed to protect the structures?
I believe that subject matter expertise that is needed for hardening does not exist in our particular area. So we sought a consultant to make sure that we were doing the right things, yet not spending more money than was necessary. So we thought that a consultant who had been working with other companies would have a better idea for helping us to do this.
Would you agree with me that a company-owned generating facility is a building?
Yes, it is.
And are you aware that the company has proposed a whole series of hardening measures at its generating facilities?
I'm aware that we are proposing some hardening measures, but I think that a generating facility is a different facility than an office building. So the steps that one might take to harden a generating facility might be very different than one would to harden a workout location.
Is that an assumption, or are you saying that as a matter of fact that the storm hardening measures to protect the perimeter of the generating facility are different?
I'm saying it as an assumption.
Part of what you're looking at for storm hardening is to prevent water intrusion into the buildings, correct?
It may be in some places, yes.
What are the other aspects of storm hardening that you're looking at then?
We're thinking that, for example, the gas pumps, those were flooding, so, and we weren't able to use them, so we're looking at relocating some of the equipment, putting things higher, measures like that. Walling off some equipment.
Well, isn't the company for substations, gas facilities, also looking to wall off equipment to protect it from flooding?
I know that they're looking at hardening measures, but what they are specifically, I don't know.
Do you know that they've already built walls to wall off, to protect facilities from flooding? Are you aware of that?
I am not aware of that.
Are you aware that the company has also extensively discussed raising equipment and relocating equipment to protect it from flooding?
I'm aware that they're taking different measures, and it wouldn't surprise me if that was one of them.
Now,
Time out, 1 second. Could you lower your microphone about 3 inches so it's like below your chin? Thank you.
Good?
And you could get
Can you
closer
hear?
to it. That's better.
Okay.
Other panels have discussed something called the System Design Task Force, which is looking at a number of storm hardening measures. Is the System Design Task Force at all involved with what the facilities are that this panel is dealing with?
I know that someone from facilities engineering is participating in a company committee. Now, the exact name of it, I don't know.
So is anyone on this panel aware of the System Design Task Force? Just out of curiosity, is anyone on this panel aware of the Edison management audit that was prepared a few years ago?
Yes.
Does this panel do the quarterly resource analysis that's called for under the management audit?
I'm familiar with the recommendation.
Hold on. You need the mic.
Sorry about that. I'm familiar with recommendation 53, which I believe you're referring to.
Yeah, on page 53, yes.
Yes, okay. And my team worked on that recommendation, which was to perform a comprehensive resource planning analysis on a semi-annual or quarterly basis. We decided on a semi-annual, and that semi-annual coincided with connecting it to the budget preparation process that we go through from May through July. It's the initial step before we present to the senior leadership team that budget plans, and then subsequently in November to January, when we reassess what we are going to go forward with that work plan. My team looked at a workforce planning application, and this was in recommendation 53 and what was in the closeout. And we looked at this several applications to assist us in providing more resource analytical capability and helping organizations in looking at potential retirement projections going forward, headcount trends in various job families that they are that work in their organization, and also assist them continuously in looking at these analytics to help them plan their workforce out into the future as they experience some of the losses due to retirements and other types of attrition.
Are the other members of the panel familiar with this recommendation from the management audit?
Yes.
You are, okay. Moving on then. Also on page 6 of your rebuttal, there's a discussion, and this is at lines 19 to 22, that you're expecting the consultant to prioritize the projects based on importance of the facility. Do you see that?
Yes, I see that.
Is this the same capital optimization plan that is used in other parts of the company? Or is this a different capital optimization plan?
This is a different capital optimization.
Why aren't you using the same capital optimization plan?
I think what the testimony is saying here is that we will get, working with the consultant, we will prioritize the projects, and then we will take those projects to the optimization committee. And there, those projects will be optimized with the rest of the capital projects.
Why isn't it the same optimization plan that is used elsewhere in the company? Why is it a different optimization?
It is the same optimization plan, except what we're saying is, we expect that the consultant will make recommendations. From those recommendations, we, facilities, will prioritize them. And then we will take those to the optimization committee.
On page 7 of your rebuttal testimony, you make reference to building flood protection walls and raising foundation pads.
Yes.
Are you aware, well, would you agree that that type of activity is the same type of activity being undertaken by electric operations, if you know?
I think I said earlier that I didn't know, but it wouldn't surprise me if they were doing it.
Now, on page 8, you make reference to your hardening projects, including measures to raise and protect electrical controls, fire protection systems, et cetera. Do you see that?
Yes.
Would you agree with me that one of the core functions of this company is to be an electrical utility?
I think I'd be hard pressed not to.
And would you agree with me that there are a tremendous number of electrical controls and electric services, things like that, throughout this company's service territory?
Yes.
Given that, and given the fact that your electric operations folks were able to design all of the storm hardening measures for such facilities, did you consult with them rather than go to an outside consultant to determine what storm hardening should be done for those types of electrical facilities?
We did not.
Now, you also talk about emergency diesel generators, uninterrupted power supplies. Are you aware that this company owns and operates generating facilities, including diesel generators?
Yes.
Are you aware that the company has extensive plans for adding additional diesel generators for pumps and things like that as part of their storm hardening measures?
I am not aware of
So you didn't consult with anyone else in the company before going to an outside consultant?
that. I think I said that someone from my group is on a committee with the electric ops folks. So during that committee, they may have discussed it, but I did not.
But you've decided to go out and hire a consultant to do these things, correct?
Yes, we have.
Wouldn't that be an indication that this person sitting on the committee hasn't provided any feedback that you already have the expertise in-house?
The fact that we have the expertise doesn't mean that we still don't need a consultant. I would think that we don't have unlimited resources to do this kind of work. And the resources that are in electric ops are focusing on, like you said, the generating stations. So we would probably take a back seat to getting those kinds of things done. To get this done in parallel with the resources we have, a consultant was used.
Did you ever ask to see if there were company resources that could be made available to you?
I did not ask, no.
These consultants that we've been talking about, is the company seeking recovery of the cost of these consultants from ratepayers?
can't answer definitively, but I would think the answer is yes.
And it's your view that it wouldn't be prudent to first determine whether you have the resources in-house before incurring extra expenses that customers are being asked to pay for?
It would definitely be true.
Now, in your direct testimony on page 123, you make reference to something called the Facilities Standard Inspection and Repair Program, which you describe as addressing, amongst other things, waterproofing and structural restoration. You can see that?
Okay, can you tell me the line?
Sure. This is on line 13.
Yes.
And you also have a general, and this is at page 120, I'll put them both together to ask one question. At 120, you identify something just called the Facilities Program, which is to maintain the structural integrity of your facilities, buildings, and or improve a building's overall condition. It's at line 7 to 9 of page 120. Now, isn't storm hardening just a portion of maintaining the structural integrity of your facilities?
I think it's maintaining plus, because we've maintained the structure of our facilities, for example, the Learning Center. Yet, 5.5 feet of water came into the Learning Center. So it's a little more than maintaining the structure.
Well, but isn't part of these programs also to improve the structures over time as called for by the circumstances?
Yes.
And isn't that, in fact, what you're doing at this point, is you're improving the structures based on changing climatological circumstances?
We're responding to Superstorm Sandy, which is requiring us to do more than we ordinarily would do to maintain the structure of our buildings.
You constructed the Learning Center a number of years ago, correct?
Yes.
Have you ever expanded it?
Not that I'm aware of.
Do you have any other facilities that you have expanded over time?
I'm not really sure. I know we built a new building. I don't know if it was bigger than the old building.
Okay, well, let me try it a different word. Are you familiar with the office building that you once had at 708 First Avenue?
Yes.
And you sold that building, correct?
Yes.
And you relocated all of the employees?
Yes.
And did you have to build out any kind of improvements of any type to accommodate those employees in other facilities?
I can't answer that. I don't know. I was sitting where you were then.
Okay. Let me move on to another topic entirely. Your CCTN, your communications network?
Yes.
Okay. You discussed that at page 75 of your direct and also in SSP-5, one of your exhibits, that you note how important this communications network is. And in fact, on line 23 of page 75, you indicate that it's the corporate backbone for the foreseeable future. Are you familiar with that testimony?
Yes, I am.
And at page 76, you discuss adding a number of new runs to expand the CCTN network over time, over the next few years, correct?
Correct.
Now, you also talk on 82 about connecting substations in Lower Manhattan. Isn't this part of your expansion of this corporate backbone that you're referring to?
We use opportunities where electric service is being implemented to expand this network, and have done so over a period of years. At this point in time, there are no facilities for communications in Lower Manhattan, and this is storm hardening approach is an opportunity to do that.
You have this network connected to other substations, correct?
Correct, we do.
And it's your goal over time to expand the network to continue to include additional facilities, right?
Where the opportunities make sense and are justified, yes.
And based on recent events, you've determined now that there's a priority to connect some of your substations in Lower Manhattan in addition to these other runs that you've discussed on page 76, correct?
That is correct.
what makes them so unique other than you're not doing it because of Sandy? I mean, isn't it part of your overall plan to ultimately connect all these substations?
As I mentioned, we take advantage of opportunities in construction to extend the network. What changed with Sandy is the fact that the flooding in Lower Manhattan so severely impacted the carriers that it's become a situation where we believe that the reliability for CCTN, in addition to the carriers, is the optimal approach to prevent outages in electric service.
But haven't you already identified if this is your corporate backbone, that the reliability of your network is superior? Isn't that why you've been building out your network?
That's correct.
On page 84, you discuss replacements of older communications huts. Now, is those huts basically reach end of life and they're being replaced? You're also hardening them, correct?
That's correct.
So is that a regular capital project or is that a storm hardening project?
In this particular case, the huts that we're replacing will be raised onto a higher level as a result of what we learned through the recent storms.
So is it a storm hardening project or an end-of-life replacement project, which is a normal capital project?
Based on the flooding levels that we saw and the exposure, these are storm hardening initiatives.
So is it your testimony that you weren't planning on replacing these huts anyway?
We will replace them. We have a program to replace these when they're end of life.
So if it's at end of life, why is it suddenly a storm hardening project?
I think it's a combination of both.
Is it, turning to your exhibit SSP-5 on page 10, you discuss some expansions of this communications network.
Okay.
Do you add new backup power sources to all of your sites?
Can you be more specific about the question?
Sure, hang on one second, let me just make sure I get there. All right, I thought I had it. So on page 10, you talked about adding a number of fiber stands, correct?
Correct.
And I believe, oh, I'm sorry, it's on page 13 that you talked about some new substations.
I'm sorry, new substations?
Well, you're talking about replacement of HVAC systems, cable modernization, and I guess what you call it is UPS and DC power system upgrades?
Correct. These are for the communication services at each of these locations, that's correct, in the CCTN network.
Do you add these new backup power sources at every site or only at certain sites?
We maintain a program to ensure that the facilities have inspected and reliable power sources for the communications as discussed with the critical services they provide. So this program is an opportunity to ensure that the existing backup systems, as well as batteries, as well as HVAC.
Is this a storm hardening program or a routine program?
This is a routine program.
Now, going back to page 10 for a moment, this is a general expansion of fiber projects, correct?
That's correct.
And I just wanted to follow up on a question I'd asked earlier, and you've identified a number of new routes here where you're going to add fiber. Is the fiber that you're adding to the lower Manhattan substations different from the fiber that you've described in this project that's on pages 10 through 12 of Exhibit SSP-5?
Yes, it's a different program.
No, it's a different fiber. Are you using a different type of material?
No, it's the same physical fiber optic cable.
It's just an expansion to a different place, correct?
That's correct.
Turning to a different issue, the Astoria East Yard, which you discussed on page 23 of your rebuttal. There you identify a potential safety hazard, a number of holes, I believe you described it as.
Yes.
Someone on the panel aware of this?
I believe Mr. Vernon responded yes to a question.
I'm sorry, I didn't hear it. Okay, thank you. I didn't hear you say that.
I thought I was off the hook.
If this is a potential safety hazard, why isn't it being repaired immediately?
We looked at doing the repair, which would basically have been a lot of paving and concrete. But during another project, we found that there had been some issues found that were environmentally related, and we did not expect to find them there. We pointed that out to EH&S, and they took a look, and it was decided that that part of the yard would need to be remediated. And it would be imprudent of us to pave, pour concrete, and then tear it all up based on a remediation plan. And that's why it's not being done now. And in addition, it was determined that it would probably need more than just paving, and that we should also include a system to make sure that the water did not go back into the new outfall.
Given that what you've identified, the potential of a forklift causing injuries, has the area been roped off to ensure that you don't have any injuries while you're waiting for this project to occur?
That everyone knows who works in that area, knows the condition of the yard, and if you are operating a forklift in that area, you would know to be careful and to avoid certain areas. I don't know if it's roped off.
I'm sorry, did you have another answer?
No, he said he wasn't aware of it.
The company, we've had over the course of this hearing extensive discussions about the company's use of contractors. Are there ever any contractors in the Astoria East Yard? Do you know?
I don't know if there are.
Do you know whether a contractor that might be there on a periodic basis would have the same depth of knowledge as the kind of employees that are there at all times?
Whenever there's anyone on the property, and if there's any issue of safety, we don't treat the contractors any differently than we would our employees. So job briefings and everything are given.
Well, but you said that all of your employees are aware of these holes. Are you briefing your contractors that there's holes to look out for?
If a contractor were working in an area that was potentially unsafe, that contractor would be giving the same kind of briefing as we would give an employee.
Do you know if anyone has been injured up to this point in these holes?
I'm not aware of anyone being injured in the East Storage Yard.
Now, according to your testimony on this point, your studies were performed in December of 2012 and early in 2013. This company was able, in the course of approximately 2 months, to develop a $1 billion incremental storm hardening program. Why couldn't you, in that same time frame, develop the plan for remediating this area and include it in this rate case if you have this potential safety hazard.
I guess, I don't think I really understand what you're asking.
Well, in a very short period of time, this company was able to identify a very large, actually, I won't say very large, a number of projects that add up to $1 billion. And it issued press releases saying it was about to spend $1 billion over 4 years on storm hardening. Now, the Hurricane Sandy hit at the end of October. The company spent approximately a month in recovering from it, and this testimony was filed on January 25th. So they had presumably the months of December and January to put together this program. Now, you had a study that showed that this was a safety hazard, and according to your testimony, that study was done in December of 2012. So why weren't you able to put together a program to remediate, as you've just described, the work you needed to do, and include it in the rate case if there was in fact such a safety hazard?
I don't think that the remediation plan is solely in the company's call. The DEC and the EPA both typically sign off on any remediation plans. And to my knowledge, that has not been done yet.
I'll move on. In your rebuttal on page 42, starting at line 19 and going over to page 43, there's a discussion of doing painting and flooring repairs and the associated safety concerns. You see that testimony?
Yes.
You also, not only do you have tripping hazards, but there's mold, and we all know the problems of mold, correct?
Yes, it does.
Well, if these are such significant safety hazards, why hasn't the company already remediated them?
Any mold conditions that we are aware of can be remediated. Having wet walls can cause mold, but to my knowledge, we have no mold that has not been remediated.
What about the tripping hazards on the floors? Have those been remediated?
Significant tripping hazards have been.
Are there other kinds of tripping hazards?
I'm sure if I walked around this room, I would find tripping hazards here.
Well, the
But
type
they
you're
are
referring
not, wouldn't be deemed whole pieces of carpet coming up. Those we would fix. But there could be unraveling carpet, and as people walk over and over it and heels get caught in it, it becomes a bigger and bigger tripping hazard.
Now, as I understand your testimony, you explained that there was roof work that had to be done first because that's where you believe the water infiltration came from. And so it was important before you start remediating walls that you got to stop the water from coming in. And I certainly understand that, and that does make sense. According to staff, this company underspent its budget in this area last year. Given that, why didn't you expedite some of these repairs so that they could have been done in the existing budget that you had?
I think the facade work had to be done, the roof work had to be done, where there were walls that there was mold, that was done, where there were significant tripping hazards, the carpet was repaired, so things that were significant, we did it.
But you still underspent your budget, so why couldn't you have done more?
We underspent the budget perhaps for painting because we used the money to clear out the yards when a big, huge snowstorm came. So between letting the trucks sit in the yard and turning the customers on or replacing the carpet in the conference room, I opted for cleaning out the yards and letting the trucks.
Yes, but my understanding is on a total basis, you did not fully spend your budget. Are you saying that you did fully spend your budget?
For money that was allotted for painting, perhaps not, but my O&M dollars, I spent.
Okay, thank you for that clarification. That's what I was just trying to understand. Now, according to the white papers related to these projects, it shows no contingencies. Is there a reason why there's no contingency shown? In other words, do you already know exactly what it's going to cost to do these projects?
Which projects are you?
These facilities O&M projects referred to regarding your painting and your flooring repairs.
I don't point the witnesses to a specific white paper that you're referring to.
Well, it's the white papers related to those. Is the panel aware of which white papers that is?
a while to get to.
Unfortunately, I don't have them marked down, otherwise I would tell you. I'm trying to click in here.
I'm not getting to it, but you can,
Well, would you accept subject to check, because I got it right from the white papers, and I do apologize, because I
Sure.
thought I had it written down and I don't. But in your white papers, it shows that there's no contingencies. Would you know why there's no contingencies?
I don't know why.
I'd like to, Your Honor, now have marked for identification the company's response to New York City Information Request 101. I'm sorry, I mean 102.
So, one page. Yep, this is my last issue.
All right, it's a two-page exhibit. It's the Shared Services Panel response to question 0102, and it will be marked, congratulations, Exhibit 900 for identification.
Is the panel familiar with this exhibit?
Yes.
Are they
102 we're talking about, right?
102, yes. Now, according to the attachment, according to the response, it's going to cost, you've estimated $520,000 to renovate this bathroom. And your response indicates that you looked at a similar project, that you first escalated by 5% to 2014, and then a design contingency of 30%. You see that?
Yes.
So if we turn to the next page. Now, let's take these one step at a time. On the left side, I see a line that says EST period date. Is that the estimate date?
I apologize, but I actually can't see it. I'm sorry.
Is any other member of the panel able to read this? This was what I got from the company, so it was a reproduction of what you guys provided to us.
Yes, we can see it.
Okay. Does that stand for estimate date?
I see it.
Is that what EST stands for, estimate date?
If you would allow, I can ask someone here who can give us the answer.
Sure.
If that's okay.
Okay with me?
Okay, we're all going to agree that it says estimate date.
Well, I just want to make sure that's what it
Yes.
stands for. And that's a date of January in 2012, correct?
Yes.
And moving over to the middle top of the page, I see a line that says CONST. I'm assuming that's construction start of July 2012. And below that, it says project in service October 2012. Is that correct?
Yes. That's
Yeah.
what it says.
Given that this project was estimated, started, and completed in all in 1 year, could you explain to me why you have an escalation of 3% on all of your costs?
I can't. I don't know the answer to that.
Do you know who would know the answer to that?
I can ask Mr. Azzolini if he knows. and he'll tell you.
Your Honor,
If that's okay.
this panel provided this. Could we get an answer to our question? Since you can't answer, I have no objection to someone who can.
I'm sorry, what was the question?
Given that this project was estimated, started, and completed in all in 1 year, why is there a 3% escalation on it?
Perhaps to bring the cost current from whatever the original numbers were?
It's not bringing it current, Your Honor, it's a 2012 cost.
Yeah, maybe the other numbers are all 2011 costs.
But Your Honor, rather than you making an assumption, I'd like to get an answer.
I'll get it. We'll confirm. The 3% is a one-year inflation. When we, the estimate date was January, we expected it to be completed in October. That's, I'm told, a normal escalation for a year, inflation for a year.
Now, is that still your escalation rate, 3%? Is that still what you use today, is a 3% escalation?
Yes, approximately.
Well, according to the cover page of this response, you took this escalation factor and first you added 5% to it to bring it to 2014, and then you added another 30% to it. By my calculation, that takes your escalation from 3% to 4.1%. Is there a reason why you're using a higher escalation factor when you just specified that your normal escalation factor is only 3%?
And this witness does not have.
Could you tell me who from the company would be able to answer that?
I'm not sure if it would be someone in engineering or someone in the cost management or accounting group.
Well, this was a response that was prepared by this panel. Is this your information or is this someone else's information? My understanding is when we see a responding witness, that witness is able to discuss the response.
I think Ms. Smith has discussed this response.
Well, she can answer the question, which is based specifically on the response.
The escalation rate on here is 3%. Where are you getting your number from?
Well, Your Honor, if you go to the front page,
Yeah.
it says that the company took these numbers and they first escalated them by 5% to get to 2014. And that they then added a design contingency of 30%.
Okay.
But if you do the math, what they actually did is they took the total number, which was $385,000. They then multiplied that by 5%, and then they multiplied that result by 30%. Now, if there was an uncertainty on the design, I could totally understand why they took the direct costs and escalated them. But they didn't take the direct costs and escalated them. They took the direct costs, the escalation, and then they took the contingency, which was already set at 25%, and they escalated the contingency by 5%, and then they escalated it again by another 30%.
Mr. Lang,
And that's my concern.
I think what you have to do is look at this response and the estimate that is attached. I believe if you read the response, it says the cost of the project was based upon the estimate for a similar but smaller project.
Yes, I understand that, and I'm not asking you to testify, Ms. Kreisky. I'd like the witnesses who put this response together to be able to explain to me why they are escalating the contingencies and the escalation factor.
And I don't think that's what they're doing, so I'm having trouble with the
But, Your Honor, that is what they're doing.
They have a 3% escalation rate in the original thing, which represented 1 year's inflation. They've apparently applied another 5% to get it up to 2014, because the original one was 2013, and then somebody decided they needed to tack on another 30% contingency. That's not an escalation, it's a contingency.
No, but Your Honor, you and I can have a discussion, but I'm trying to examine the panel that provided this.
They
There is
already
a
answered,
contingency column.
they answered your question. They said they had a 3% escalation rate, which is clearly what this shows, and then the cover shows how it was escalated to get it to 2014.
Which means they escalated the escalation factor. It's the math, Your Honor, that's the way they did their math.
It means that they added more escalation because the time changed from 2012 to 2014.
Well, but Your Honor,
They added
that's
2
your
more years
position,
of
that's
escalation.
not their position.
It's theirs. They answered it in the question that's posed in the interrogatory.
They actually did not, Your Honor, and now you're assuming facts that this panel has never
Okay.
stated.
Move on to something else, please.
With respect to the contingency factor, it's listed here at 25%, correct?
Yes.
And you've escalated that contingency factor an additional 5% and then an additional 30%, correct?
The contingency is 30%, which is 25 plus 5, 30.
No, actually, if you do the math, you took your 25% contingency and you multiplied it by 1.05, and then you took that result and you multiplied it by 1.3, correct?
The contingency is 30%.
On top of the 25 that's already embedded, correct?
No.
No? Could you do the math and show me then how you can get to where your numbers are?
I can't do the math.
Okay, I'll move on. According to your testimony, your direct testimony on page 149, this is one of the projects that the company is proposing, but I don't see any date for that project. And on SSP-11, page 4, while it indicates an approximate $500,000 cost for this project, it's not in any of the line items for the rate year and the other year. So is the company actually planning on going forward with this project?
Are we talking about the bathroom at Van Ness?
Yes.
Is it that project?
Yes.
I think that project may have been complete, but I'm not sure.
Well, wouldn't it show up then in either the 2011 or 2012 columns on exhibit SSP-11, page 4?
If we completed it, it should. I
Yeah.
just don't recall this particular bathroom.
Well, could you turn to SSP-11, page 4, please?
Mary, could you?
And I will tell you that between your revised version and your rebuttal and your direct, it's the exact same information.
And I'm at SSP-11.
Are you on page 4?
Page 7.
Now you have a category heading on page 4 that says bathroom/locker room/kitchen renovations. Do you see that?
Yes.
And then the second item underneath that is this particular project, correct?
Yes.
And as I go across the columns from 2011 to 2017, I don't see it listed for any column. Does that mean that you're not doing the project?
Any of the bathrooms, I know that we're doing all of the bathroom projects.
So where are they included in your rate request then?
I don't know where or why we didn't put it in, but we are doing the bathroom.
Do you know when you're doing them?
We have a plan for when we're doing all of the bathrooms. This particular bathroom, I don't recall when.
Okay. Your Honor, the very last thing, I just need to mark an exhibit and lay a foundation. Would I have any questions on it?
Okay. The document appears to be the response of the Shared Services Panel to question number 0035, and it will be marked Exhibit 901 for identification.
Is the panel familiar with this exhibit?
Yes,
Is this prepared by you or under your direction or control?
yes.
Your Honor, that is all I have.
Thank you. Staff for 10 minutes.
Thank you. Thank you, Your Honor. Brandon Goodrich for Department of Public Service staff. Hello, panel. I'm going to be asking a few questions today. I would like to start by handing out copies of a few IR responses. I have 3 IR responses which I'm going to ask to be marked as exhibits, and I have 2 further IR responses which are already included in the staff shared services panel's exhibit 1, which I'm just providing for your convenience.
They can be too. These are all the marks.
Yep. Just like this one.
I think a 3D mark.
3D mark and 2 that are just like that.
Okay, to save some time, since these are all responses by the shared services panel, the response to question 0418 will be marked 902 for identification. The response to 0763 will be marked 903 for identification. And the response to 0767 will be marked 904 for identification.
Mayor, so you're on.
Yes, please.
Panel, if we can get through the formalities first. If you'll turn to what's been marked as Exhibit 902 for identification purposes. This is a response to question DPS IR 418, which is labeled as being responded to by the company shared services panel. Was this document prepared by you or under your direction?
Yes.
Turning to Exhibit 903. This is the IR response to staff interrogatory 763. Was this IR response prepared by you or under your direction?
Yes.
And turning to what's been marked as Exhibit 904 for identification purposes. This is the response to DPS IR 767. Was this response prepared by you or under your direction?
Yes.
And the remainder of my questions have to do with what's been marked as Exhibit 903 and comparison of a couple of sites listed in Exhibit 903 and the sites listed in what's already been marked, I believe, as Exhibit number 226 for identification purposes, which is a couple of IR responses that are in the staff shared services panel, Exhibit 1. So first, in response to DPS 763, which again is Exhibit 903 for identification purposes, the panel stated that a roof replacement was completed at a building identified as 28th Street. This is on the bottom of page 1. Is that correct?
Yes.
And is this the same building that is identified as W or West 28th Street S/C on page 59 of Exhibit SSP1?
On page, what was the page?
Page 59 of Exhibit SSP1.
Yes.
And is the building listed in the response to 763 also as, I'm sorry, is the building listed in response to 763 as 28th Street also the same as the building that's listed as 281-11? I'm sorry, this is on page 78 and 79 in Exhibit SSP1. I'm sorry, folks. So if you look on page 78 of Exhibit SSP1,
Yes.
Under the Borough of Manhattan, the second one down says 281 11th Avenue, West 28th Street Workout Center.
Yes.
Is that the same as the 28th Street identified in response to DPS 763?
It's the same location, yes.
And turning now to buildings identified in response to DPS 763 as the Astoria Warehouse and the Astoria Transformer Shop. And looking at page 59 of Exhibit SSP1.
Yes. I see it.
Is that Astoria 15-40, 23rd Street?
Of which exhibit?
On page 59 of SSP1. The last one on the list.
Yes, it's the same location.
And do these buildings identified correspond to any of the locations identified on pages 78 and 79 of Exhibit SSP-1?
I don't really understand the question.
This is in response to DPS 763, identified the Astoria Warehouse and the Astoria Transformer Shop. These are buildings in Queens, I believe, correct?
Yes.
So on
We're
page,
going to need you to speak up. We can't, the recorder's not getting you.
Yes.
Okay, thank you.
so on page 78 of Exhibit SSP-1, there are 3 buildings listed in Queens. Are any of those the same building?
College Point is in Queens. That's not the same as Astoria.
Louder, please.
The Learning Center is in Queens. That's not the same as Astoria. (31-01) 20th Avenue is part of the Astoria complex.
Moving on to the building identified as Bruckner Building 3 in response to DPS 763? And on page 78 of Exhibit SSP-1, is this the same as the property identified as 1560 Bruckner Boulevard, all buildings?
It's at the same location, yes.
And in response to DPS 763, you identified the building as Eastview. Is this the same as the building identified on page 78 of Exhibit SSP-1 as 315 Sawmill River Road Eastview?
It's the same location, yes.
And in response to DPS 763, is the panel identified the building as 110th Street. Was that the same as the building identified on page 78 of SSP-1 as 2141 First Avenue 110th Street Service Center?
It's the same location, yes.
And similarly, there's a building in response to DPS 763, listed as College Point Boulevard. Is that the same as the building listed on page 78 of Exhibit SSSP-1 as 124-15 31st Avenue, College Point Buildings and Apartment?
Yes, it's the same location.
And one last one, and we're just verifying here. Is in response to DPS 763, you know the building as the Learning Center, which has been discussed quite a bit. Is that building the same as the 4382 Vernon Boulevard, the Learning Center?
Yes, that's the same location.
Thank you. No further questions from us.
Thank you. Any redirect?
Just give us a second to confirm.
Not on the record.
Okay, we're back on the record. Could you,
I'm sorry, I thought I wasn't
no,
on. No redirect around.
thank you. Thank you for your testimony. These witnesses are excused. We're going to take a lunch break until 2:15.
I already got on.
Is Westchester ready to go? Is Westchester ready to go?
I
So I just wanted to let you know that that's the one, those are the page references I have.
Okay, let's go on the record. And I want to remind everyone that if you haven't spoken for a long time, to say your name before you speak. Go ahead and call the next witness, please.
Thomas Riazzi, company calls Robert Musola.
Mr. Musil, could you stand and raise your right hand, please? Do you swear or affirm that the testimony you're about to give will be the truth, the whole truth, and nothing but the truth?
I do.
And do you adopt your pre-filed testimony as your sworn testimony in these proceedings?
I do.
Thank you. You may be seated.
Mr. Musillo, are there any clarifications you would like to make to your testimony?
There's one, which applies to my rebuttal testimony, electric, page 23, lines 4 through 8. gas, page 20, lines 6 through 10, and steam, page 20, lines 15 through 19. And the clarification has to do with a response that we received from staff on interrogatory clarifying that the incremental cost related to plug-in electric vehicles who select voluntary time of use rate would in fact be deferred for future consideration.
Are there any other initial comments you would like to make before we start cross-examination?
There was one additional update I was going to provide with respect to the company receiving a property tax settlement last Thursday from the city for $140 million, and I believe Rich Kane covered that earlier this morning.
Mr. Musillo is available for cross-examination.
Thank you. Westchester for 15 minutes.
Yes, good afternoon, Mr. Musillo. My name is Babita Modi.
Good afternoon.
And I have some questions for you concerning the company's storm hardening surcharge conceptual proposal. Please turn to page 66, lines 6 to 15 of your direct electric testimony, where you state that the company plans to seek recovery.
Excuse me, what page, I'm sorry?
68.
I have it.
There you state that the company plans to seek recovery of storm hardening investments in base rates through this rate filing and through future major rate filings for investments that can be timely addressed in rate proceedings. When is Con Ed planning to submit its next rate filing?
I think it's premature to respond to that. We're dealing with a electric, gas, and steam rate filing right now.
That's fair. Please turn to page 74, lines 17 to 19, where you testify that the company proposes the surcharge as a vehicle for recovering incremental costs pursuant to a defined process. Do you see that?
Yes, I do.
With respect to your statement that the company proposes a surcharge, is it your position that the commission would establish the surcharge itself in the defined process you mentioned, or would the surcharge be established in these rate case proceedings?
No, the surcharge would be developed in accordance with the process that I outlined, and that subsequent to these proceedings, if indeed it was necessary to implement a surcharge, that would be established on a separate basis.
So you are not completely abandoning the process that has been described on pages 75 through 77 of your direct electric testimony. Is that correct?
That's the exact process we would recommend following in developing the surcharge.
Okay, I have a few questions regarding that process for you.
Okay.
On page 74, line 20 to page 75 of your direct electric testimony, you begin discussing the key elements of the process you propose for recovery of storm hardening costs through a surcharge. The first key element requires the company to file with the commission its plan to invest capital in a specific storm hardening project and/or program. Prior to making this filing, will Con Ed distribute its plan to interested parties for review and comment?
That wasn't the intent of my process. The process would provide staff and interested parties an opportunity to comment on the company's filing.
That would be as part of this rate case proceeding?
Again, part of a separate filing, separate and apart from this proceeding.
So you understand that the commission would assign a different form or case number for that separate filing?
I'm not sure how the commission would choose to handle it, but it would be separate and apart from this filing. The surcharge proposal would be filed with the commission. Parties would have an opportunity to comment on that proposal, and the commission would either make a recommendation to institute the surcharge or not, as part of a separate and distinct proceeding from where we are today.
And how do you propose that the 60-day time frame that you have proposed on page 76 for the staff to comment on the filing that the company would make would work with respect to that commission process?
The 60 days appeared to me to be a reasonable time frame in order to review and act on the filing.
Are you aware that the staff policy panel has submitted testimony in this proceeding? And on page 48 of that staff policy panel direct testimony, they indicated that they were provided certain information on March 25th, and at the time of their direct testimony on May 31, they felt that it had been provided limited amount of time for staff review. Are you aware of that filing?
I'm aware of the comment.
When you make that filing, will the company provide projected budget data?
Among other things, the company would provide the projected costs of those specific projects, requesting to be covered under the storm hardening surcharge.
Where is that referenced in your direct testimony?
Refer you to page 75, beginning on line 13. The filing would explain the location and scope of the projects and/or programs, benefit to the system, and you could read on. In there was also the intent to provide a cost estimate in terms of the project.
So you were trying to say that you will provide projected budget data when you reference benefits to the system?
My intent in the process was certainly to cover that the company would provide cost estimates with respect to those projects.
If you look at line 6 above, I think you have more language that helps you.
Thank you.
It doesn't specifically say projected budget data there, does that?
It doesn't, but it obviously is part of any company filing for a surcharge. It would include an estimate of the project costs.
Will interested parties or interveners have discovery rights under your proposal?
Staff and interested parties would not have an opportunity to comment, and I assume that would also include discovery with respect to the filing.
But the procedure of discovery rights is not specifically stated in your direct testimony, is that correct?
I did say that staff and interested parties would have an opportunity to comment.
So with respect to that process you're referring to, would that all occur within the 60 days that you have proposed the commission, the staff would have to make a recommendation to the commission?
Yes, that's under my proposal, 60 days.
So if there were a discovery dispute during that 60-day annual review, would that stop the clock?
The commission always has the right to take more time in terms of rendering a decision.
So that 60 days is not a firm proposal?
It wasn't proposed to be a firm date of 60 days.
Did Did you envision during this 60-day period, which is not a firm 60 days, that interveners would have an opportunity to submit their own testimony?
I think I said that interveners and interested parties would have an opportunity to comment on the proposal.
So when you said opportunity to comment, you meant prepare file testimony?
Opportunity to comment. The form of that comment, I did not specifically identify.
Did you envision that there would be an evidentiary hearing related to that filing?
I didn't envision that.
I'm sorry, I did not hear.
I did not envision an evidentiary hearing.
Thank you. So what did you propose would be the logistics for offering into evidence or any record the filing and any testimony that would have been provided if the commission so desired?
Could you repeat that question?
What were the logistics for offering evidence into an administrative record under your proposal?
The logistics would be, as I explained in my testimony, interested parties would have an opportunity to submit written comments with respect to the company's proposal. And those comments would be taken into consideration, I assume.
Would that be part of an official record?
I can't answer that.
You didn't propose that. Is that correct?
I did not propose that.
Did you envision that parties would file written briefs for commission review?
I didn't propose that, or I didn't consider that. Remember, this proposal was a process that was proposed in terms of providing the company an opportunity to identify cost increases related to additional storm hardening, an opportunity to petition the commission, file a notice, parties have opportunities to comment on it. That was the proposal.
Thank you for that explanation. On page 76, lines 1 to 2, you indicate that the company will proceed with construction after commission action. What does commission action mean? I.e., does the company intend for the commission to make upfront prudence determinations with respect to the projects in the plan?
Commission action is approving the surcharge mechanism to be put in place.
In putting the surcharge mechanism into place, the commission would be approving costs that the company could put into that surcharge mechanism
Correct.
for interim capital projects?
I don't know what you mean by interim capital projects.
Incremental storm hardening investments that are not incorporated in the existing base rates.
That's correct.
How long after the 60-day period for staff to provide its recommendation will commission action be required under your conceptual proposal?
Could you repeat that?
How long after the 60-day period that you have testified to in your direct testimony for staff to provide its recommendation to the commission will commission action be required?
I can't comment on that.
Going back to your prior answer with respect to the commission approving the costs that would be in the surcharge mechanism. Do you propose that the commission would be approving the prudency of the costs related to the projects that would be flowed through under that surcharge mechanism?
The commission would be approving the capital expenditures no different than they approve the capital expenditures that are proposed in this base rate case filing.
Could the cost of the projects for which the company seeks to recover carrying costs through the surcharge exceed $300,000 or 2.5% of the company's aggregate revenues?
Say that one again?
Could the cost of the project for which, or projects for which the company would seek to recover the cost through the surcharge mechanism exceed $300,000 or 2.5% of the company's aggregate revenues?
Certainly exceed $300,000. Unlikely to exceed 2.5% of company revenues. We're talking total company gross revenues. I assume you're talking.
Are you aware that that would trigger a major rate filing?
$300,000? I don't believe that's correct.
I'm referring to, that's okay, I'll move forward. So by seeking to recover those costs through the surcharge, isn't the company seeking commission approval of the underlying incremental projects?
Again, the surcharge is meant to cover storm hardening projects over and above what's included in the space rate file, if they were identified and if they materialize.
Is your understanding of when the commission would approve such a project or such costs that the commission would have to make a determination as to the reasonableness or prudence of those costs?
I'd refer you back to my last answer that these capital expenditures would be approved by the commission, no different than capital expenditures that are being reviewed in this base rate case.
So how would that process compare to the process you have described in your testimony, your direct testimony at pages 75 through 77? If it was no different, I'm trying to understand this formal process we have established here for this case compared to what you have described in your direct testimony for those costs that could exceed $300,000.
The difference is the timing of the recovery. The surcharge is intended to provide a mechanism for the company to recover storm hardening costs that are in excess of what's included in base rates. It's a mechanism, simply a mechanism to provide recovery of costs. The process around the review of those capital costs would be no different.
So I understand the timing aspect, but I'm trying to understand your last part of your answer with respect to the process. Are you saying that the process you have described in your direct testimony is the same as the process that has been established here?
Certainly the review process of the appropriateness of the capital expenditures would be the same or similar.
Okay, but I think you said procedure would be different. Instead of evidentiary hearings, it would be notice and comment.
That's correct. Thank you.
Elaborate with respect to your last answer to the judge, what you meant by the difference between the notice and comment. What did you envision in that process as compared to what we've established here?
The administrative process, in my mind, would be different. Rather than a formal rate case filing, it would be a separate notice and filing with the commission. So from an administrative standpoint, it certainly would be different. But the opportunity to review the expenditures, in my mind, that opportunity is still present, whether or not it's in the base rate case filing or in a notice or filing.
So you envision the procedures will be different than those that were used here, is that correct? For the capital costs that issue in base rates here.
Formal process would be different.
So I just want to understand your proposal and what you've said today. So is that 60-day period the same period that you expect to occur as part of the regular processes that you believe that are normally established for a notice and comment period?
Objection, Your Honor, calls for legal conclusion.
Your Honor, he's proposed a process, and I'm just trying to understand the...
All right, let's have a little dialogue about this. If the revenues you are seeking exceed a certain threshold, it becomes a major rate case. There's a required evidentiary hearing by the statute. What you're proposing, as I understand it, is that you think you'll be below that threshold. Therefore, there'll be no statutory requirement for evidentiary hearings, which means there's no statutory requirement for testimony. So instead, you would follow a notice and comment process. Now, ordinarily, when we follow a notice and comment process, we file a SAPA notice, which requires a certain amount of opportunity for comment. I don't think your 60 days provides the opportunity to comply with SAPA. But generally, what you're talking about is ordinary, the process you would normally follow if it was a notice and comment proceeding. And I think you're saying that the substance would be the same in terms of looking at the information, the opportunity for discovery, the standard of review people would be using. The only difference is instead of using testimony and cross-examination, it would merely be people writing written comments. Is that a fair summary of where we are?
That's a fair summary. You said it a lot better than I did.
With that, I
It's
have
back
no
to you.
further questions.
Your Honor, ECC is going to go before the city.
Okay. Your Energy Consumers Council.
May I proceed, Your Honor?
Yes, we have 30 minutes down for you, Edison.
George Demontopoulos, counsel for NYCC, New York Energy Consumers Council. Good afternoon, Mr. Masillo.
Good afternoon.
Mr. Masillo, can I direct you to your direct testimony, page 52, lines 9 through 17?
Electric, gas, steam.
Electric, I'm sorry, electric.
Got it.
Okay. There's a question and answer that's sequenced there where you ask what deferral or reconciliation mechanisms not currently in effect does the company propose to be established? And your answer was, as explained in the testimony of the company's compensation and benefits panel, the company proposes to defer for customer benefit the amount by which payments under the variable component of the non-officer management pay plan are less than the rate allowance for this expense. Do you see that?
Yes, I do.
The deferral mechanism proposed here presupposes adoption by the commission of the variable component, the non-officer management pay, correct?
Yes, it does.
Directing you to your testimony on page 53, line 21.
Got it.
Where it says, and here you're discussing your request for the expiration of the current capital spending target mechanism. Is that correct?
That's correct.
Am I correct that the current capital spending target mechanism was put into effect by the commission because of the company's excessive capital spending in the not-so-distant past? Is that correct?
I think that's fair.
In your opinion, has the capital spending target mechanism been effective in curtailing the company's excessive spending, capital spending in the last 3 to 5 years?
I wouldn't necessarily attribute it to the capital spending target mechanism. I would attribute it more to the policies and procedures that the company has put in place in terms of developing its capital budget, in terms of optimizing its capital budget, in terms of more discipline introduced in developing the capital budget. I would attribute it more to that than the spending capital target mechanisms.
But you would certainly agree that in the last 3 to 5 years, the company has not exceeded the capital spending target.
That's correct.
So if the target has been effective, isn't it therefore prudent to continue the capital spending target mechanism because it is an effective mechanism, and also to avoid any future lapses in excessive capital spending by the company?
Again, I don't believe the target cap mechanism necessarily resulted in reduction to the company's capital spending. What resulted in reduction to the company's capital spending was its discipline in terms of capital budgeting, its new processes and procedures put in place, and its reprioritizing of capital projects. The capital spending target mechanism in itself would not have resulted in those underlines.
Am I correct that the company can always petition the commission for unanticipated additional needed capital spending should the need arise during an existing rate plan?
Subject to a materiality test, the answer to that is correct.
And directing your attention to page 68, lines 3 to 15 of your address in electric.
I'm sorry, which lines?
I'm sorry, page 68, lines 3 to 15.
Okay. Got it.
Actually, I have to get there myself. Just a moment.
Paper copies are sometimes better.
I know they are. I should have done that. Too much bigger. Okay, so this line of questioning is regarding system hardening costs. So am I correct that since the company seeks recovery of storm hardening investments and base rates through this rate filing, and this is a one-year rate case, that any surcharge mechanism for storm hardening investments is therefore not a suitable approach?
I wouldn't agree with that.
You don't? Why would you agree?
Just because we're in a one-year rate plan, it doesn't forego the identification of storm hardening capital projects in the rate year that would require the mechanism of storm hardening to kick in. The fact that it's only a one-year rate plan, there is still a opportunity to identify storm hardening projects by the company or others that are above the amount included in the base rates, even in a one-year rate plan.
Well, the company has included storm hardening projects for its capital expenditures in the current rate plan. Is that correct?
That's correct.
Now, a previous questioner from the county of Westchester, counsel for Westchester County, asked you a series of questions regarding your proposal between pages 75 and 77. Why hasn't the company filed its plan within the testimonies of this rate case?
Excuse me, can you repeat that?
Yes, why hasn't the company filed its plan within the testimonies of this rate case?
Are you speaking to?
And I'm speaking to your, the line of questioning that, just a minute. This is regarding storm hardening costs through a surcharge.
Correct.
So you propose on page 75 that the company would file with the commission its plan. And my question is, why wasn't that plan included in testimony in this rate case? Or in these rate cases?
The plan I'm referring to is storm hardening capital projects that may be identified subsequent to establishment of new rates. So the plan I'm talking about is to cover those projects that were not reflected in base rates.
Right, but this is a one-year rate plan, correct?
That's correct.
So you anticipate that after, that there are storm hardening projects that the company hasn't thought of to include in this rate case, and that it would need to do that after the commission is ruled in this rate case?
There could be storm hardening projects identified by the company or others that are not anticipated in this rate plan.
And you think that there are such projects that the company has not anticipated and not included in this rate proceeding that couldn't wait a year before the company's next filing?
There's no reason why the company would agree to waiting for a year if we could put such a mechanism in place to cover such costs.
So why not include, why not include in this rate case all storm hardening projects that the company wants within the context of this rate case?
So maybe I'm not being articulate on this point, is that the storm hardening surcharge is meant to cover projects that may materialize in the rate year, and they may be at the request of other parties other than the company. So it's to cover these capital projects that at this point in time are an unknown. Maybe they will not materialize, but maybe they will.
Okay, so are you saying that the company has already included all contemplated storm hardening projects in its current rate plan that it anticipates for the coming rate year? Is that correct?
That's correct.
When counsel for Westchester County was questioning you, she used a $300,000 threshold. If that number were $300 million, what would your response have been to her question regarding that threshold?
It would have been different.
Is it fair to say, based on your last response, that the company does not anticipate $300 million worth of storm hardening projects that would fall under this surcharge that you're proposing?
The company does not anticipate certainly a revenue requirement equal to $300 million for storm hardening projects.
Thank you. Directing your attention to your rebuttal in electric. Page 3, line 17.
Got it.
Okay. Unfortunately, that doesn't seem to be right. That is missing. Never mind about the source. Am I correct that the company is requesting $425 million in the coming rate year for storm hardening investments? I'm sorry. You're asking for $42 million in electric in storm hardening for the rate year. Is that correct?
No. I believe the rate year number for electric, gas, and steam is just north of $200 million.
Okay, this is for the rate year?
This is for 2014 rate year.
On page 6, there's a reference to $425 million. I don't know if that's going to help you.
I can do that. So the $106 million. Okay. Okay, I see. Directing your attention to page 16 of your rebuttal on electric.
Got it.
Lines 9 through 16. And, okay, this is regarding your request for deferral accounting. Isn't it true that the company's mobilization for a storm, which may include the use of outside contractors and mutual aid crews from other utilities, is not a new approach to storm preparedness?
I'm not sure I understand the question.
Well, in your testimony, you state. Oh, I'm sorry. It's page 16 of the rebuttal in electric, lines 9 through 16, where you state new approaches to storm preparedness could have material cost implications not adequately contemplated in the company's rates or by the operation of a storm reserve accounting.
Got it.
And so my question is, isn't it true that the company's mobilization for a storm, which may include the use of outside contractors and mutual aid crews from other utilities, is not a new approach to storm preparedness by the company?
The use of contractors and mutual aid crews is certainly not a new approach. However, the new approach would be around securing those resources earlier on in the process. So to ensure that mutual aid crews and contractors are certainly available. One of the lessons learned coming out of Sandy is one of the new approaches would be to make that phone call earlier on in the process when the storm is further away from the northeast.
Doesn't the company already do that? I mean, isn't that something that, as a matter of course, the company does in every storm?
The company makes that call for every storm. I'm suggesting that because of the heightness of awareness around storm response and restoration, that call will most likely be made earlier on in the forecast of the major storm to make sure those crews are available. And the earlier on you make that call, the higher probability you have of the storm missing or not striking at the force that it was anticipated.
Directing your attention to page 16, lines 17 and 22.
Got it.
Okay, where you state the heightened expectations as to company performance and greater risk for the company associated with the assessment of its performance, including the potential for negative revenue adjustments and civil penalties, is reasonable for the company to take responsive action. Am I correct that the company wants to transfer the risk for negative revenue adjustments and civil penalties from the company to customers by having customers assume the company's usual risk in these areas?
I wouldn't agree with that interpretation. What the company is looking to do with this provision is to provide an opportunity to recover reasonably incurred costs in terms of responding to a potential event. So this reconciliation is not shifting risk, it's providing the company a reasonable opportunity to recover prudently incurred costs that we're not able to forecast because of the nature of storms and events.
But aren't these the kind of risks that are inappropriately passed on to customers, because then those risks become ineffectual for their intended purposes, because the company can just pass along to customers the cost of those risks without any consequences to the company?
Again, I wouldn't agree with that. Staff has the opportunity to review, as they are doing with the deferred costs with respect to Sandy and Irene. Staff has the opportunity to review the prudency of those costs before they're passed on to collected for customers. This mechanism is simply providing an opportunity for the company to defer those costs subject to collection based on staff's review of the prudency of those costs.
Isn't it also true that some of the other measures that you propose for which you are seeking deferral, such as the CEO certification, is also a risk that is inappropriately passed on to customers?
Again, I would disagree with that presumption. We know that there is a CEO certification required by the companies, by all New York State utilities, that is going to result in increased costs for the company. Again, the company is looking for an opportunity, reasonable mechanism to recover those costs, which cannot be estimated at this point in time.
Am I correct that the company, which is a regulated utility, is asking to be treated as if it is not a regulated utility in this context?
I'm not following that logic.
In terms of the shifting of the risk, but I understand that you don't agree that the risk is being shifted.
And I don't.
Directing your attention to page 20, lines 1 to 23. We're still on the same document. So this is the section about cybersecurity. So if I understand your testimony correctly, this call for enhanced cybersecurity requires deferral accounting for O&M expenses and carrying charges on capital investment in excess of what is ultimately allowed in rates. In what ways has the company's previous request for cybersecurity been rendered insufficient by this latest call for enhanced security?
It's the focus today, which hasn't been in the past, on both physical and cybersecurity requirements and needs. So I don't think it's any secret that companies have been subject to cyber attacks, and it's a changing environment, and so the environment is different today, certainly in the future, than it was 2, 3, 4 years ago.
That's exactly my point, actually. I mean, did the company really need this recent call for enhanced cybersecurity to know that cybersecurity is important and to prepare an adequate amount for it in its budget?
We believe at this point in time we have an adequate amount in the budget, but involving cybersecurity requirements and needs that may be identified in the future, this is the mechanism we're looking to provide a cost recovery mechanism. These are against cybersecurity requirements, needs that are identified that are above and beyond what's included in base rates.
Directing your attention to page 25, lines 8 through 9.
Got it.
So you state there, generally the staff proposals there, you're discussing staff proposals, take existing asymmetry that favors customers over investors to a new extreme. Am I correct that your testimony reflects the tension that exists between the interests of shareholders versus the interests of ratepayers? Is that correct?
I wouldn't agree with that description. I would characterize it more as an equitable treatment of capital underspends, which we agreed to fully reconcile and provide the benefits to customers, but the denial of a reasonable opportunity in very limited circumstances for an upside reconciliation with respect to certain capital requirements that are either unanticipated or more difficult to forecast. And I offer interference as one of those examples.
Do you agree that on a lot of the issues, especially in the rate case, there's a balance and that has to occur, and in this particular example that you give, the company's position favors that of investors over customers. In this particular part of your testimony.
Again, I wouldn't agree, is that we're providing and agreeing to staff's position on a downward reconciliation for underspending in electric, gas, and steam or capital costs. Provide that underspending, the carry cost of that, provide that as a credit to customers. And then we're seeking a very limited opportunity for an upward reconciliation. I think that's a fair balance. I think that's a fair approach. I wouldn't go balanced.
Directing your attention to page 36, lines 18 through page 37, line 3.
I'm sorry, where?
Oh, page 36, rebuttal, lines 8, starting on line 18.
Okay.
There you state the company plans to pursue the concept of a storm hardening surcharge in the context of the collaborative.
That's correct.
Without waiving the company's right to present to the commission at any time a request for relief related to storm hardening projects not reflected in rates in this proceeding, and to request waiver of the commission's deferral accounting authorizations requirements, including but not limited to materiality. Is that correct?
That's correct.
I'm actually going to skip this because you answered it earlier.
Thank you.
Am I correct that having a collaborative such as the one that's been commenced presents no reason not to reflect all storm hardening plans and rates in these proceedings for the coming rate year?
I would agree it presents a better opportunity to better reflect the forecasted capital expenditures for 2014. But it doesn't eliminate, in my mind, the need for a surcharge. But certainly, it certainly provides a better cost estimate for 2014.
What does?
The collaborative. The process of the collaborative.
The process. Because, am I correct that there is no cost estimate that's been established yet in the collaborative?
That's my understanding.
Directing your attention to page 38, line 10.
Got it.
Regarding costs that should be included in the storm reserve, specifically the circumstance where the company incurs costs of storm response preparation, but the storm does not materialize, or it does materialize, but not with the force anticipated. Am I correct that such costs are currently contemplated and have always been contemplated within the just and reasonable rates adopted by the commission in setting rates for the company.
I wouldn't agree with that. This is the same issue we were discussing earlier with respect to the company securing crews, mutual aid crews, and contractors, and this storm does not hit. An example of that I pointed out was the winter storm in February of this past year, and we have no such costs of that included in the historic year, and therefore those costs are not included or reflected in the rate year.
Isn't it true that storm severity detection forecasts have continued to improve over the years? In other words, it's much easier to predict the severity of storms today compared to, say, 10 or 20 years ago, and with more lead time before the storms reach the company's territory?
I couldn't comment on that. I'm not a weather expert.
Has the company recovered the $1.3 million in O&M costs referred to in your testimony for the February 2013 snowstorm named Nemo?
No, the company has not.
What was it about Snowstorm Nemo that made it a major snowstorm, as described in your testimony?
Not to be facetious, but it was heavy winds and a lot of snow.
Am I correct that this is an example of a storm that did not materialize with the force anticipated because there was a storm?
That's correct. This is exactly the example.
Do you think that the cost of the company's storm preparations will go up or down if such costs are included in the storm reserve?
I think that the costs will be what they are. It will reflect the actual cost incurred to respond to the event. Whether or not we have 5 NEMOs or 1 NEMO will dictate whether or not those costs go up or down.
You would agree that the company has some discretion as to when it's going to mobilize its contractors and its assistants for that storm. And would you agree?
I would agree that the company has discretion on when to mobilize.
How would you define prudence in the circumstance where a storm doesn't materialize?
Prudence can be measured in a number of ways, looking at what the forecasts were at the point in time, when the company requested the crews, how many crews were requested, what other utilities did in the neighboring service territory. So prudence could be looked at in a number of venues.
Is it true that including such costs in the storm reserve gives these costs a premature and undeserved presumption of prudence?
No, I wouldn't agree with that, because the costs are subject to staff audit and review for appropriateness before the costs are collected from customers.
I just have a couple more questions and then just a few interrogatory responses to Mark. I drafted these questions in the steamer belt for some reason, so I'll direct your to steamer belt. And it's the first one is page 14, lines 11 to 12.
Okay.
Am I correct that the company's current storm reserve mechanism does not provide for capturing storm preparatory costs? And I guess that's an electric. Well, I guess, are you testifying here to steam? Because there's no steam reserve, storm reserve mechanism, it's steam. Is that
Right.
correct?
This assumes that there was such a mechanism in Steam. So
I see.
the testimony is the same in electric gas system.
Right. So in the company, am I correct that it's only in electric that there's a storm reserve, correct?
That's correct.
And so am I correct that the current electric storm reserve mechanism does not provide for capturing a storm preparatory cost?
If the storm does not materialize, that's correct. If the storm does not materialize to a major storm that qualifies for deferred treatment, that's correct.
But is it included for a storm that does materialize, but is less severe than anticipated?
It does not contemplate the deferral. Presently, the storm reserve does not include such costs.
Right, okay, thank you. Directing also your attention to lines 12 through 18. You indicate that modifying the mechanism so that it would in response to the public interest underlying the enhancement of company performance expectations and potential negative consequences would be reasonable. Isn't it true that the public's interest in the company's performance during storms has not in fact changed, and the expectations is the company will respond adequately, consistent with the just and reasonable rates that have been adopted by the Commission?
Okay. Would you mind repeating that one again?
Sure. Isn't it true that the public's interest in the company's performance during storms has not in fact changed at all? And that the expectation is, and continues to be, that the company will respond adequately and consistently with the just and reasonable rates that the Commission has adopted in the existing rate list, and in rate cases to come.
I think public customer expectations certainly have changed post-Sandy. And there certainly is a heightened awareness to the company's response and ability to restore customers in a timely manner. Certainly there's a heightened awareness by customers.
I guess what's the basis for your belief that the public's perception has changed, other than your own personal belief?
Talking to neighbors, talking to customers. I was personally at a PAL for 8 days, and my neighbors certainly thought it was 8 days too long.
Directing your attention to page 14, line 19.
I'm sorry?
Page 14, line 19.
Got you.
This has to do with the reserves of material and equipment. Does the company currently maintain an insufficient level of investment in inventory items needed for storms?
No, I wouldn't say that.
No.
This mechanism goes to the potential requirement for New York utilities to establish additional reserves for spare equipment that could be shared. So these reserves for materials and supplies would be above and beyond what is currently stored now, company stored in locations.
I assume you're aware that the Moreland Commission's final report found that the company experienced resource shortages during the sample. Is that correct?
I understand. That's my understanding.
Directing your attention to page 15, line 5. Where you state the company proposes that be authorized to defer such carrying costs. Is the company asking for authorization to defer carrying costs it doesn't know about yet there?
The company is asking the approval to defer costs for what we believe are known changes that are going to be required in 2014 beyond, for which we don't have cost estimates for.
At this time, Your Honor, I'd like to have some documents marked. Your Honor, the first document is a one-page interrogatory response from the company to NYACC interrogatory number 5.
Okay, I see that all of these are responded to directly by the current witness.
That's correct, Your Honor.
This will be exhibit, I'm sorry, the response to question E005 will be exhibit 905 for identification.
I'm sorry, what was that number here?
905.
905. And the next document is also an interrogatory response by the company, by the company's witness, Robert Masillo, to NYCC's interrogatory number 7. Consists of 3 pages of interrogatory responses as well as 2 pages of an attachment provided by the company.
That'll be 906 for identification.
And the third document is a 1-page document for the company witness's response to interrogatory number 80.
That'll be 907 for identification.
And finally, the last is a 2-page company response from the company witness to NYCC's interrogatory number 81.
That'll be 908 for identification.
Thank you. So, directing your attention to what has been pre-marked for identification as exhibit number 905. Was this document prepared by you or was this document prepared by you?
Under my supervision.
Or under your supervision?
Yes.
And
is that true of all 4 of these documents?
That's true for all 4.
Do you have any corrections?
I have no corrections.
Thank you.
But I know there's updates that we've...
Okay, note them for the record then.
Excuse me?
If there's updates beyond what's on these pages, you could tell us what they are.
We've updated the, just looking at the date of the storm costs. I believe we have an update to the total storm costs reported in the exhibit to
Just give the question number.
question E007.
Okay, that's exhibit 906.
Exhibit 906. I don't have that in front of me, the update.
I was actually going to inquire about the updated numbers. Do you have at least the aggregate numbers? For example, Exhibit 906, the attachment, I was hoping that you might have, I think I saw that the estimated insurance recoveries is 42 million now instead of 35. Is that correct?
We have a further update to that. It's now 50 million.
50. And do we have an updated number on the total Superstorm Sandy costs?
I believe we do. I don't have it in front of me. We could.
Do you know what document that would be in, that's already in the record?
We sent, I believe, this past Friday, I'm losing track of days.
Monday.
And with an update Monday, the updated storm hardening, the updated response to deferred O&M costs.
That was sent out on Monday, you said?
Actually, Friday.
Your Honor, just to clarify, I don't think it was a specific update to this data response.
But it provided an update aggregate number.
What document are we talking about? Did the update appear in?
It was a document circulated, I think, in filed with the Secretary? Filed with the Secretary with a copy to all parties, and I hope Your Honors on Friday with a clarifying letter that followed on Monday, again filed with the Secretary. Most positive, this one with Your Honors and all the parties to the case, which included the updated Sandy-related costs, I think through May 31st, am I correct, Priscilla?
That's correct.
Through May 31st. So on this past Friday and Monday, two documents filed with the Commission and a copy to all parties.
Your Honor, maybe we could have those reserve a number for placement of those documents into the record.
Let's reserve 909 for those two documents. And I'm assuming they are already readily available to the parties at this point?
To our knowledge, they're on the DNM side. Correct?
Yes.
Directing your attention to what has been marked for identification as Exhibit 908. There's a series of questions here that ask the question, let's take the first one, where we asked
Can you refer me to the question? I might have missed these.
Oh, I'm sorry. It's the interrogatory response to question number 81. It's the last one.
It's the last one.
It's a two-page response.
Got it.
Okay, and I requested that the company provide a percentage portion of the incremental storm expense incurred by Con Edison under Hurricane Sandy that obviated the need for future O&M costs, include calculation and evidentiary supporting response. There is no calculation or evidentiary supporting your response. And the response states that the company does not believe that the incremental storm-related restoration costs incurred due to Sandy will have any meaningful effect on or obviate the need for future O&M costs. What effect would it have? I mean, there must be some costs that have been obviated as a result of the repairs and expenses incurred by the company for the storm. And they amount to, in the others, basically $250 million, correct?
That's correct.
So, the company saying that kind of $250 million in expenses that no O&M costs that would have been required have been obviated as a result of incurring that amount of cost?
I responded in two parts. One, if you look at the nature of some of these costs, in terms of setting up base camps in 3 boroughs, in terms of staffing call centers, in terms of tree removal to get to down lines. So there is a good portion of costs, which would obviously be, I think people would agree, would be excluded.
I hear what you're saying.
And
but,
then,
but what about equipment and materials?
And then the second part would be that the costs incurred were to restore customers and to get the system back to its normal pre-Sandy operating condition. So I fail to see any significant O&M savings related to taking wires off the street and ground and restringing them on poles, as one example. So in discussion with our operating folks, we haven't identified any significant or material O&M savings as a result of these restoration efforts.
Okay, but exhibit, what has been marked as Exhibit 906 for identification, you have some breakdown there on the first page of the 2-page attachment. And you have a category called equipment and materials, and that's $23.4 million. You're telling me none of that has obviated the need for any O&M costs?
Equipment and materials are poles, wires. So I
don't know what it is.
I'm not getting the connection between alleviating future O&M costs from, for example, poles, wires, things of that nature. So
you're telling me that among the $250 million, that there is no O&M costs that have been obviated as a result of the expenditures of that amount of money in the restoration costs?
I'm saying there's none that have been identified or presented to me.
Thank you, Mr. Miller. I have no further questions.
Thank you. Is New York City going to go next, or one of the other ones going to go first?
I'm happy to go. I think the staff is the only other part here.
I had 5 down for Mr. Class.
He's left for the day.
Is staff ready to go?
Yes.
You have 15 minutes. Is that more or less accurate?
I think so.
Why don't we do staff, get it over with? Then.
I don't know how I feel about it. I just wanted to get this over with.
Let's not, don't take these things personally.
I'm not, Your Honor. Brandon Goodrich for Department of Public Service staff.
Good afternoon.
Good afternoon. Mr. Musillo, before Public Service Law Section 6515, which you referred to as the CEO certification that you discussed in your testimony, before that was enacted, was the company required to comply with Public Service Law and any rules, regulations, orders, or procedures adopted pursuant to Public Service Law?
I don't believe that's the new requirement that we're speaking about. The requirement is to ensure that the companies have policies, procedures, and controls in place to ensure compliance. That's what we're talking about here.
The question I asked, and that was what I meant to ask. So I'll ask again, since you didn't respond to it. Before Public Service Law PSL 6515 was enacted, was the company required to comply with Public Service Law and any rules, regulations, orders, or procedures adopted pursuant to it?
Yes.
In your estimation, Does Con Edison do a good or a poor job of complying with the public service law and the rules, regulations, orders, and procedures adopted pursuant to it?
I'm not aware of any situations where we're in non-compliance.
Since 1907, when the public service law was enacted, and up until and including the present, hasn't it been necessary for Con Edison as an organization to have knowledge of the public service law and the rules, regulations, orders, and procedures adopted pursuant to it, with which Con Edison must comply?
I would agree with that.
Turning to the earnings sharing mechanism stub period discussion, in your rebuttal testimony, and focusing on electric at the moment.
Will you mind referring me to a page?
Oh.
That's okay.
I'm not going to refer to
Okay.
something specific. So, focusing on electric operations, are there seasonal variations in electric sales?
Yes, there are.
And when are sales at their highest?
For electric?
Yes.
During the summer.
And are there seasonal variations in capital additions, again, for electric?
I'm not aware of seasonal variations in capital expenditures. The company may, certainly not driven by weather. Seasonal variations in terms of we may do more capital in the springtime, getting ready for summer prep. But I'm not aware of significant variations, seasonal variations in capital.
And now for gas, are there seasonal variations in sales for gas?
That's correct.
And when are sales highest?
In the winter.
And are there seasonal variations in capital additions for gas?
Again, I'm not aware of seasonal variations in capital expenditures.
Moving on, regarding the company's storm hardening proposals in this case, I believe earlier you stated that there was, across all three services, $200 million in expected spending during the rate year?
That's correct, just north of $200 million, I think it's.
And is that capital, O&M, or advance?
That's all capital.
All capital. And do you know what the rate year revenue requirement impact of that north of $200 million figure is?
I don't have that in front of me. If you assumed a 15% carrying cost on that capital, it would equate to roughly, on an annual basis, $30 million.
And would that, you said $30 million?
On an annual basis.
On an annual basis. Would that $30 million, would that include depreciation expense, property taxes, and
That's an estimate. Estimate of 15% would include those components.
Thank you. And earlier, with your exchange with Mr. Diamantopoulos, he asked you about the statement in your testimony, and forgive me, I missed the page, about customer expectations regarding this company's storm response having changed since Hurricane Sandy. Do you recall that discussion? And you had stated that you yourself, I believe, were out for 8 days, and you and your
My wife
neighbor
reminds me of that every day.
and you and your neighbors felt that 8 days was certainly not acceptable.
I think I said 8 days was 8 days too long.
Fair enough. Before Hurricane Sandy, is it your assertion that customers would have felt that 8 days of outage was acceptable?
No, that wasn't the intent of my comment. My comment was there's a heightened awareness in terms of customers being out of service for an extended period of time, since they experienced it, post Sandy.
So customers wouldn't have been aware of being out for 8 days before Sandy? Can you explain further how you believe customer expectations have changed?
Being out 8 days without electric service, your expectations are going to be a little different than if you never experienced being out of your base.
In what way?
In what way? No hot water, no heat, no cooking, no lights, and that way.
And customers wouldn't have been able to expect that being out of power for 8 days, not having experienced it, would result in no hot water, no heat, no cooking?
I'm simply saying that customers' expectations are heightened after the fact you experience a situation like that.
And again, in your exchange with Mr. Diamantopoulos, and as I noted, you referred to discussions with your neighbors and apparently your wife. Do you have anything other than these anecdotal stories backing up your assertion that customers' expectations have changed?
My belief and opinion that expectations have changed.
And turning to the company's surcharge proposal, you stated the company would file a proposal. I believe the phrase was something like when the company believed it was necessary, when it wouldn't, was it when sorry. Give me a moment, I'll re-ask my question.
Good.
I believe you said that the company would make a filing when it had storm hardening investments that cannot be timely addressed in rate proceedings or through multi-year plans, and this was from page 68 of your initial testimony, Electric.
That sounds right.
How often do you envision that the company would make such filings?
It seemed to me that no more than annually.
And back for a moment to the quote I just stated, that cannot, for storm hardening investments that cannot be timely addressed in rate proceedings or through multi-year plans. Would that be a legal standard that the company would be required to show in order to move forward in this hypothetical surcharge proceeding?
I wouldn't describe it as a legal standard. I would describe it as a demonstration by the company that, one, these costs were not reflected in base rates, and two, I believe I mentioned in my testimony, we could not reprioritize existing capital work, and three, that we would demonstrate the need for those projects. Would the surcharge mechanism consider the entire capital cost for the projects in the company's filing, or would it just be the portion expected to be incurred until the company's next rate filing? It would be the capital costs applicable to projects that actually went into service during that period of time.
And would this surcharge mechanism be subject to any reconciliation?
Could you describe reconciliation?
True up of. I mean, would there, as in, like, for example, fuel costs are reconciled on an annual basis to ensure to guarantee that the company, I don't want to say to guarantee that the company recovers, but to ensure the company recovers the amount that it was expected to recover. Would you envision a reconciliation in that manner?
I would certainly envision a reconciliation to the amount collected through the surcharge and the amount that would ordinarily be collected through the inclusion of base rates. So certainly a reconciliation of the surcharge, the actual costs incurred, and the inclusion of base rates. So certainly would envision a reconciliation.
No further questions, Your Honor.
Good afternoon, Mr. Musella. My name is Kevin Lang. I'm an attorney with the City of New York. I have a few questions for you today. Good afternoon. If you don't understand any of my questions, I would ask, please let me know that, and I'll restate them or revise them or something.
Thank you.
Peyton, could I just ask you to shift over like 1 foot? So I go to the left. Just so I can see the window.
I'm going to move over to see myself.
Mr. Musella, like Mr. Diamantopoulos, I was actually using your STEAM testimony for direct. So the page numbers that I'm using for your direct testimony are STEAM, and for rebuttal, and when we get there, I'll let you know that those are electric. I didn't realize they were different. So I'd like to start referring to your direct testimony. And in your direct testimony on page 6, you discussed that the filing was delayed due to the response to Hurricane Sandy. In actuality, wasn't it up to this company to decide whenever it wanted to file its rate case? In other words, you were under no deadline, were you?
We were under no deadline.
And it was entirely your choice as to when the filing would occur?
Subject to the demands placed on the company's workforce responding to Sandy.
But that was within your control, correct?
Sandy was within our
No.
control?
The demands placed on your workforce, the timing of filing this rate case was entirely within your control, correct?
I wouldn't agree with that. Company resources were deployed responding to the events of Sandy, that the company's focus on preparing the rate case took a, if you would, a backseat to company administrative folks being also responding to Sandy.
But at least with respect to the electric case, you could have filed that in September if you wanted to, correct?
That's correct.
You could have filed it in June or May if you wanted to, correct?
That's correct.
And the company chose not to do so, right?
That's correct.
On page 11 of your direct testimony, you note that there was $42 million excluded from the revenue requirement. Given, as we've just established, that the company's focus was first on restoration of Sandy, and that it was within the company's control as to when the filing occurred, is there a reason why you didn't hold off for another couple of days to provide a complete filing to the commission?
I'm not sure holding off the filing for 2 days or a week would have provided us enough time to include that additional $42 million, identify it and include it in the rate filing.
Why not?
Estimates were being developed, work plans were being developed. There was a lot of work around identifying projects, and so at the time we filed, there was $42 million in projects which were not yet identified or fully costed out. I'm not aware of delaying the rate case 1 or 2 days would have resolved that situation.
Well, but you knew it was $42 million, correct?
We knew it was $42 million.
And that could have been inserted into your revenue requirement model, couldn't it?
It's not that easy.
Yeah,
It
that's
takes
it.
roughly, excuse me,
Go ahead.
it takes roughly 3 to 4 weeks to roll through capital expenditures, through the revenue requirement model, through taxes, through depreciation. It's not as simple as typing in $42 million.
Was it important to the company that the filing be in before the end of January?
It was important for the company to make the filing as soon as practical.
There's been some discussion of the storm hardening issues. I will do my best not to discuss anything that's been previously discussed, but some other issues that the city has regarding the storm hardening. In your testimony on your direct testimony on page 74, and again, I'm using your STEAM testimony here, you talked that the storm hardening is about public policy objectives. Now, we've talked to some of the other panels. Would you agree that your storm hardening is primarily about reliability, preserving the reliability, enhancing the reliability of your various electric, gas, and steam systems?
I wouldn't necessarily agree with that.
You wouldn't?
Would not. Storm hardening projects, as I understand them, are about protecting the company's infrastructure from flood damage and wind damage. The fact that storm hardening projects may have other benefits, such as reliability, such as safety, that may be true. But my understanding of the storm hardening projects identified by the operating panels is that it's designed to protect the system from the weather events that we saw in Sandy.
And isn't protecting the system about ensuring the reliability of the system?
Like I said, there are other benefits in terms of storm hardening that could result in reliability improvements, or would result in reliability improvements.
So this is one of the issues that I'm kind of struggling with, that I'm trying to understand in this case. The electric infrastructure panel yesterday said that it was really all the same thing. And you're saying that storm hardening is different from reliability projects.
Well, this is an accountant's interpretation of storm hardening expenditures. If the operation panel described it differently, I would defer to their description.
On page 63 of your direct, and again in this team, you talk about a comprehensive and disciplined business planning and budgeting process. Did you see that testimony?
Can you point me to the lines?
Sure, I have it at line 16 to 22.
I must have a different version. I don't have, on Steam, you're on Steam?
I'm on Steam.
63, page 63?
Page 63. Hang on one second. No, I wonder if I might have switched over and given you an electric page number there. Do you have your electric direct there?
I do.
My apologies, I thought I was using exclusively Steam.
No problem. What lines?
Lines 16 to 22.
Got it.
Okay, and do you see there where it talks about a comprehensive and disciplined business planning approach?
Yes.
Okay. According to the testimony that was filed in this case, the direct testimony, between the time that Sandy hit and when testimony was filed on January 25th, 2013, the company developed a $1 billion storm hardening program over 4 years. Are you familiar with that $1 billion program?
Familiar with the $1 billion. I'm not familiar with the individual projects.
But generally,
yes.
According to the testimony, that program was developed outside of the company's new capital prioritization process. My question to you is, do you believe it's consistent with this disciplined approach? Now, admittedly, Sandy was a very significant event, but that your immediate response was to put aside that capital prioritization process in order to develop what programs the company would do, particularly in 2013? Is that consistent with the disciplined approach that you refer to here?
My understanding in terms of the reprioritization of capital jobs is that took place for 2013, and we reprioritized roughly $50 million of capital projects in 2013. I'm not aware of the reprioritization with respect to 14 beyond the $1 billion.
Well, I was focusing on 2013.
Yes, okay.
And isn't it correct that reprioritization, that at the time you filed the testimony on January 25th, that the identification of the projects that would be reprioritized, you did not follow the capital optimization approach?
I can't answer that. I'm not aware of whether or not we followed it or did not follow it.
If you did not follow it, would you consider that to be consistent with the disciplined approach that you're referring to in your testimony?
Not necessarily.
Are you familiar with the management audit that was performed by Liberty Consulting?
I'm familiar with the audit, again, not all the details.
Okay. But generally familiar?
Yes, I am.
Are you aware that one of the issues that was identified by Liberty related to the company's budgeting process and the lack of a consistent economic value analysis method? Are you generally familiar with that?
I'll take that subject to check, generally familiar with it.
If you want, I wasn't planning on marking it, but I can refer you for checking purposes that this was discussed at page XI-53 and 54.
Okay.
Now, isn't it correct that one of the responses of the company to the management audit was to create the capital optimization project or process?
I don't know if that was a direct response to the management audit, but certainly subsequent to the management audit, we developed a optimization process.
Now, isn't it correct that prior to Sandy, the company had experienced a number of major storms? Hurricane Irene was one of them. There was some very significant nor'easters that have hit the New York City area, and some lesser storms as well. Isn't that correct?
That's correct.
Why is it that those storms did not cause this company to make any immediate and rash changes to its plans, but Sandy suddenly caused you to rush right out and make all of these substantial improvements? What was so completely different about Sandy from all the other major storms that the company's experienced recently?
Your Honor, with due respect, I think this question was appropriately posed a number of times to the operating panels that were responsible for developing those plans, and I don't see how our controller's viewpoint on that is really relevant to me to add to the record in this proceeding.
Now, Mr. Lang, why are you asking the accountant this?
Because this witness is generally the policy overview witness for this company, in which he refers to a number of the issues generally that the company is touching on in the other pieces of testimony. Historically, in every rate case, this company has provided an overview type witness who is speaking in generalities.
Okay, but you went in depth on this subject already with the other panel, which was the specific panel on these issues. Do we really need to cover this ground again? I mean, I don't see. I think it's just redundant at this point, and it's not going to be as enlightening as it was with the correct panel.
Well, I guess from the economic standpoint, Your Honor, which was not discussed with other panels, did the company believe economically there was an urgency to rush into all of these storm hardening programs?
Economics were not considered in terms of developing the plan for storm hardening. In terms of, let me stop there.
I'm sorry, was there more?
No, let me stop there.
On page 13 of your testimony,
we're on electric direct?
Yes. You referred to an alternatives analysis and cost-benefit analysis that was performed. Do you know any of the details of those analyses?
Could you refer me to the line?
Sure. I have it at line 15.
I believe here I'm describing the panels, summarizing the panel's testimony in terms of how they identify infrastructure enhancements.
So you weren't involved. I'm just trying to understand whether you were personally involved.
I was not personally involved.
Okay. Would you know, sir, from your position as the comptroller of the company, why Con Edison has not made a commitment to storm hardening measures prior to 2013?
I could not answer that.
On page 14 of your rebuttal, and this is on the electric rebuttal, it's page 17,
okay,
lines 17 to 20.
I'm sorry.
Sure. Page 17 of your electric rebuttal, lines 17 to 20.
Gotcha.
There, you refer to the costs of establishing emergency reserves. Do you see that testimony?
I do.
Isn't it correct that the company already maintains reserves of materials and equipment for particularly electric and for the gas businesses?
The company maintains inventory. What I'm referring to here is the potential requirement to establish reserves above and beyond which is normally required by New York utilities. My understanding of this is that there will be, or proposed to be, a additional reserve of materials established, set aside to respond to potential events.
When you say reserves, are you talking inventory, or are you talking something other than inventory?
I'm talking physical inventory reserves.
So it's the same thing, just greater quantities?
Correct.
I'm aware that when this issue was discussed, at least by the governor some time ago, he may not have been aware of the utilities practices already. Is Con Edison taking a position that it's already maintaining sufficient quantities of inventory? Or do you believe that you should be maintaining even greater quantities?
I'm not aware of any issues with respect to the quantities and the levels of reserves the company currently maintains.
You also talk on the next page, and again in the rebuttal, about this scorecard proceeding.
Correct.
And that you would think it's going to result in incremental costs for the company. Would you agree that your storm preparation expenses are a part of your cost of doing business?
I would agree that the costs are part of our cost of doing business and properly reflected in rates, should be properly reflected in rates.
Do you agree that the company is subject to a number of regulatory requirements? I'll give you an example: safety standards. Another one is safety targets, SAIFI, CAIDI, CAIDI. Those are regulatory requirements as well, correct?
Correct.
Do you have special deferral mechanisms related to complying with those regulatory requirements?
I would say that the company is currently staffed appropriately and has the resources to respond to those regulatory requirements today. These requirements, in my understanding, would be new.
But won't the company be required to staff based on whatever requirements are imposed by the commission?
That's correct.
And isn't it the company's responsibility to manage its operations to meet all obligations that are imposed on it?
The company's responsibility to manage those obligations and resources. All we're saying here is we want a reasonable opportunity to recover the incremental costs associated with managing those responsibilities.
Isn't the company already seeking an increase in the number of employees for the rate year compared to the historic or test year level?
That's my understanding, but not to address this issue.
But the company maintains the flexibility to reallocate resources, both funds and manpower as appropriate, correct?
That's correct.
And the company could reallocate resources here as appropriate, couldn't it?
That's potential.
Now, in terms of the materiality, is the company already determined that the cost of complying with the scorecard would satisfy the commission's materiality threshold?
The materiality threshold in terms of rewards or in terms of a materiality associated with the petition?
Associated with this deferral mechanism that you're referring to. In other words, is it correct that right now the company has the ability at any time to seek deferral accounting for an expense that it believes is extraordinary, but the standard is it has to be a material expense, correct?
That's correct. And to put that in context, for electric, the 5% materiality threshold on earnings is $40 million. On a pre-tax basis, that's $60 million. So that will virtually preclude the company from recovering any costs based on materiality under these type of proposals.
So in other words, if I understand what you just said, these costs wouldn't be considered material under the commission standard, correct?
I'm saying that they would not meet the materiality standpoint in terms of the 5% threshold. Not that they wouldn't be material.
In your view, if the company is not properly prepared for future storm events, should the company's shareholders bear any of that risk, or should it entirely be placed onto the customers?
Could you repeat that? I'm sorry.
Sure. In preparing in future storm events, is it your position that the company's shareholders should not bear any risk of the company not preparing properly to address the future storm events?
That's not my testimony.
No, I'm asking if that's your opinion.
That's not my opinion nor my testimony.
Turning to your capital spending, the issue of that capital spending, in your electric direct testimony on page 59, going over to page 60.
Okay, electric direct?
Electric direct.
Page 60. Got it.
It says that the company may face circumstances that cannot be reasonably anticipated at the bottom of the page. Do you see that?
You're on page 60?
I'm sorry, 59 to 60.
59 to 60. Got it.
And you indicate that the costs are often significant and they shouldn't be offset by deferring other projects. See that? Isn't that exactly what you did, though, with your 2013 storm hardening expenses? You deferred other capital projects?
Yes, we did. We reprioritized and deferred. And we had the opportunity to do that based on the inventory of projects.
And other panels have testified that the company requires and insists on the flexibility to be able to reprioritize projects for any number of reasons, correct?
That's my understanding.
To your knowledge, did the company experience any difficulty in reprioritizing the projects in 2013 in order to accommodate the storm hardening projects? Were you involved in that process?
I was not personally involved, but my understanding is that it was a challenge, and it always is a challenge to reprioritize jobs.
On page 73 of your electric direct, I'm looking at line 5 here. You compare your storm hardening investments to smart grid investments.
Right.
And further down that page, and this is at line 18, you say that the company is seeking the right to defer costs that are more speculative. Would you agree with me, sir, that many of what the company calls storm hardening costs are continuations and expansions of existing projects?
Again, I would defer that to the respective operations panels.
If they were expansions, do you believe that those costs would be speculative if it's ongoing projects?
If they were expansions in order to address storm hardening needs, I'm not sure necessarily I would agree.
Now, isn't it also true that the company has already identified the programs it intends to undertake for the rate year?
My understanding is that the operations panels have identified a series of projects. Whether or not that is an all-inclusive list, I'm not aware of.
On page 61 of your direct, and again, this is your electric direct, on lines 2 to 3, you discuss the potential for an immediate response even without rate recovery. Do you see that testimony?
You're at 63, did you say?
No, 61, lines 2 to 3.
No, I'm reading about it first.
Is this the direct, electric direct?
Yeah, direct.
I don't have that.
Give me 1 second. Yeah, on page 61, I'm sorry, the question starts at the bottom of page 60 and carries over. It starts on line 20 on page 60 and carries over to 61 on the electric direct.
Okay, as explained by the electric infrastructure?
Correct.
Okay.
One of the items that you identified there as immediate response is implementation of FERC's new definition of bulk power facilities. Are you aware that the electric infrastructure panel identified that there is a transition period related to this change, and compliance is not required until 2015?
I'm not aware of that.
Turning to the certification requirements that Mr. Goodrich talked to you about, he covered some of what I was going to cover, so I won't go into great depth on it. But you've stated in your testimony, and you stated this in your rebuttal, page 16, lines 2 to 5.
We're on steam rebuttal?
And 1 second. I believe it is, yes.
So, can play the sentence again?
Sure, I'll find it in the electric code.
On steam, I'm on page 15, line 15.
Okay. Do you see where it discusses the requirements about the changes to the public service law? On your electric, by the way, it's page 14, apologize.
Okay.
Just give me 1 second. Just want to make sure I'm giving you the right page citations at one time. One second, apologize. Okay, if you turn to your update for STEAM, and it's page 16, lines 2 through 5.
Got it.
Now, you say that that the new law requires the company to develop a complete inventory, and you list here regulations, rules, procedures, orders, but then you add something that you call other PSA requirements. Would you accept, subject to check, that section 65.1 or 65.15 does not include something called other PSA requirements?
I'll accept that.
So is it that the company is planning on doing something broader than what the law requires?
No, that's not my understanding. We're going to do exactly what the new law requires us to do.
Now, earlier in this proceeding, there was a discovery motion related to some discovery that the union requested. In Con Edison's response to that motion, it cited to a letter between its CEO in 1974 and the commission chairman in 1974. It cited to an internal memorandum in the 80s, and it cited to a number of orders from the 1990s. Were you at all involved in that motion, or were you aware of that motion?
I wasn't here in 1974.
No, with the motion.
No, I don't recall being involved.
Do you know what record-keeping or cataloging system Con Edison has that keeps track of, for example, commission orders or commission policy statements?
Your Honor, I don't see how this line of questioning is within the scope of this witness's testimony.
Well, this witness is suggesting that it needs millions of dollars of additional cost recovery to comply with the new regulatory requirements. So I'd like to understand the procedures that the company already has in place as to whether or not these costs are incremental and whether it needs additional cost recovery.
I think this witness is testifying to a potential cost that the company is seeking to recover because he cannot reasonably estimate it. The company cannot reasonably estimate it because the company, other departments, or a company-wide effort right now is seeking to develop, plans to comply.
And it is our position that the company doesn't need.
Hold on. Look, the issue is relevant, but I will say this for this line across and the earlier line across on this issue. Nobody's getting to the heart of the matter. The testimony here talks about what it costs to comply with the Sarbanes-Oxley Act, and nobody has addressed what kind of effort similar to that would be needed to comply with this other act.
And that's
all of this broad cross about does the company know there's rules in effect since 1907 doesn't mean anything, and it's kind of a waste of our time.
Well, I'm trying to get to that exact issue, Your Honor.
I understand, but if you're not going to be more specific and more useful, I would rather you quickly wrap that up and move on to something else.
Well, let me finish pursuing this issue. Are you aware of any kind of cataloging that is done by this company so that it can maintain and track its compliance with PSD orders?
I'm not aware of a full catalog that highlights or categorizes all commission orders, rules, and regulations, electronically or otherwise, in the company.
Is there a catalog of certain commission orders?
Yes, there is.
And do you know what orders are included in that catalog?
I don't know.
Now, according to the union's Exhibit 4, which is included with their direct testimony, I believe your counsel has provided a copy of it to you. It shows that for 2012.
Just one second. Does the witness have that form? I think Ms. Krajewski provided.
Is that what this book is?
Yes.
I gave her a heads up.
Okay.
No.
It's open. It's open to it.
It's open to the page.
Got it.
Mary, did you open it to the 2012 page by any chance?
There's a 22. I thought there was a month-by-month page.
The 2012 summary would be fine.
You expect me to see something?
Oh, my glasses again?
You can't see it.
I spent 11.
Mr. Musso, while your attorney's just getting to the right page, this was an exhibit that is a discovery response from the company that shows the workforce and the allocation amongst the different departments and divisions of the company. And it's been provided on both a monthly basis and an annual basis. And I know the print is a little small there, but that document I believe you're looking at right now is for the year 2012, correct?
It doesn't appear to be labeled, but I'll accept that.
It's the one
Okay. Yes, it's a statement.
Okay, at the very bottom of that page, it does say year 2012. I'll admit the print's very small.
I see it now.
Okay. According to this exhibit, it shows 31 employees working for the president and chief operating officer, correct? At the top of the page?
That's what it shows.
16 employees in a group called Business Ethics and Compliance.
Where are we on the page?
They're under the law department.
Got it, yes.
When the company calls it Business Ethics and Compliance, what does the compliance there mean?
This group, according to my understanding, is compliance with EEO, compliance with company policies on ethics and around ethics. That's what this group focuses on.
Does it include Sarbanes-Oxley compliance?
No, it doesn't.
Which group does Sarbanes-Oxley compliance?
Sarbanes-Oxley compliance is done in part by internal auditing.
And internal auditing is the 55 individuals listed there?
That's correct. And also with the assistance of our external auditors, Pricewaterhouse.
Do you know how many people are at Pricewaterhouse?
Pricewaterhouse would devote an estimate of 3 to 4 employees full-time on compliance.
And in addition, in total under your law category, am I correct that that shows 196 people in your law department?
That's correct.
So if I just say, excluding your Pricewaterhouse people, if I add up the employees working for the president, your business ethics and compliance, your general auditors, and your law department, would you accept, subject to check, that that's 282 people?
I'll accept that.
And it's your position that with 282 people that are involved in issues related to the company's adherence to laws and legal requirements, that is insufficient for you to confirm that you are in fact in conformance with all applicable laws as required by this new certification?
My reference point is the work and incremental costs around Sarbanes-Oxley and the compliance with Sarbanes-Oxley new rules and regulations. And that's my reference point where the company incurred approximately $3.2 million of incremental costs to comply with Sarbanes-Oxley. I would say that the Sarbanes-Oxley compliance is roughly equal to the compliance under this new CEO certification. So that's my reference point in terms of incremental costs.
Isn't it true that Sarbanes-Oxley was a set of new requirements that were imposed on the company?
No different than the CEO. Sarbanes-Oxley required the CEOs to certify that financial statements were, that you had policies and procedures in place to ensure the accuracy of financial statements. And that compliance activity to do that resulted in approximately $3.2 million of incremental costs.
Now, the first certification required under the new public service law statute is in March of 2014, correct?
That's my understanding.
Is the company's compliance work already underway in preparation for that, or are you waiting for the beginning of the rate year to start that compliance work?
Preliminary work has already begun.
Have you filed a petition for recovery of the related costs?
We have not filed a petition.
Are you planning on doing so?
We do not. It's my understanding that we don't plan on filing a petition.
Have you you could turn to page 55 of your direct testimony on electric.
I'm there.
There, you're responding to staff's testimony on their downward reconciliation mechanisms, correct?
That's correct.
If Con Edison underspends its budget each year, is it the company's position that its shareholders should receive a portion of the money that was not spent?
That's not the company's proposal.
On page 56 of your testimony, you recommend or propose upward reconciliation for certain events that are due to external circumstances, correct?
That's correct.
And if I understand your testimony, you're not seeking any such reconciliation for 2013, correct?
That's correct.
In fact, the company was able to manage its budget and reprioritize projects, defer some, maybe cancel others, in order to stay within its budget, correct?
The company was able to do that in total, not within silos.
Let's look in total first. I understand the company's position on silos. Is there a reason why the company feels that it would be unable to engage in the same type of management in the rate year that it was able to do in 2013?
I couldn't speculate on what may or may not happen in 2014. What we're looking here for is a limited upside reconciliation for costs that are outside the company's control.
But you don't know that you actually will have any such costs, correct?
I do not.
And isn't it correct that if the costs are material, the company already has the ability to seek deferral accounting for those costs, correct?
Well, as I explained later, the materiality threshold virtually eliminates that possibility.
Well, but if it's a very significant cost, it doesn't eliminate that possibility, correct?
It would have to be extraordinarily significant.
Do you know what the company's, just on the electric business, what your annual revenue requirement is?
The annual,
approximately?
Annual revenues are roughly, you're talking about gross revenues?
Your revenue requirement, what your total revenue requirement is that you're seeking. Is it about $8 billion, I believe?
For electric, it is subject to check about $7 to $8 billion.
So you're saying that if the company had to spend an additional $5 or $10 million on an $8 billion revenue requirement, it wouldn't be able to do so? And it needs this upward reconciliation?
Well, the revenue requirement is not the comparison that you would compare it to. You would compare it to operating income and return on equity, not total revenues.
And what is your operating income and return on equity?
Operating income for electric is roughly $800 million. Return on equity, we're currently earning below our authorized 10.5.
On page 20 of your rebuttal.
Read steam.
I believe so.
Okay.
Lines 8 to 9 of page 20. You say that there are various proposals that place new or increased risk on the company. Do you see that?
What line do you want?
That's lines 8 to 9.
On page 20?
Yes.
That place new or increased risk on the company, right.
Okay. And if you go down to lines 20 to 21,
right.
Isn't it true that the company does not have a steam weather normalization clause at this time?
That's correct.
And staff's testimony, as I understand it, and my question is, do you understand that staff's testimony is there should not be a steam weather normalization clause? Is that your understanding?
That's my understanding.
Well, if the company doesn't have one, and staff says you shouldn't have one, how is that a risk created by a brand new proposal?
I would agree that's not an additional risk.
Is it an increased risk and you don't have it now?
I would agree it's not an increased risk.
Now, another one that you referenced there is the time of use rates for the electric vehicles. Do you see that? It's up a few lines.
Correct.
That's a rate design issue, is it not? What you've described here?
What line do you want? I'm sorry.
It's lines 15 to 19.
Your Honor, I think this was the testimony that was corrected by Mr. Musilla when he took the stand.
I'm sorry, I don't have that. Is there a correction to this? I didn't see that.
Yes, I corrected both in the electric, gas, and steam rebuttal testimony based on an interrogatory from staff, whereas staff, from my understanding, concluded that those costs would be subject to deferral.
My apologies, I did not catch that. On the rebuttal on the next page, you note that there is a changing regulatory landscape.
Yes?
Isn't it true that Con Edison itself needs to adapt as the world around it changes?
Could you repeat that one?
Sure. The landscape in which the company operates, the regulatory landscape is changing, correct?
Right.
The company is also dealing with issues of, we've talked about climate change is changing. There's also now the oil to gas conversion program is a change. If I thought about it for a few minutes, I could probably come up with 10 or 15 other examples. Wouldn't you agree that there's a lot of things that are changing?
I would agree with that.
And doesn't the company in its operation of its electric, gas, and steam businesses need to stay current with the world around it that's changing?
I would agree with that.
And isn't it also true that in some instances, and let's take the oil to gas conversion, that there's an opportunity for the company to achieve higher revenues through new sales to new customers?
I would agree with that.
And your shareholders will in part benefit from those increased sales, right?
Not significantly. Those sales are caught up in the revenue per customer mechanism. So for the most part, those additional revenues would not drop to the bottom line.
But as rates are reset and those mechanisms are reset, over time, the shareholders will receive some benefit, won't they?
No, those benefits go entirely to customers. As higher revenues reduce or used to offset higher costs, and the effect of higher revenues really go to customers.
Isn't it true that the oil to gas conversion program also involves extensive capital improvements?
That's correct.
Don't the shareholders earn a return of and on their investment on those improvements?
That's correct.
And isn't there a benefit there?
There's a benefit on the additional rate base, that's correct, but not necessarily on sales revenues.
Now, continuing down, you note that the staff proposals take the existing asymmetry of customers over investors to a new extreme. Do you see that testimony? Lines 20 to 22.
On what page?
That same page. Page 22. Sorry.
I'm sorry, what line on page 22?
20 to 22.
Got it.
Is it your view that your investors are being harmed?
Harmed by what?
By this asymmetry that you're describing here?
Certainly not being held.
Are they being harmed?
If these asymmetry reconciliations result in the company's inability to recover its costs, yes, being harmed.
Well, so far, these asymmetrical reconciliations have been in place for a while, correct?
That's correct.
Has the company been unable to recover its costs to date?
There have been scenarios where the company was unable to recover its costs, yes.
Isn't it also true, well, strike that. You said the company has not been able to recover its costs?
There's been situations.
Are you talking for discrete programs, or are you talking on a general basis?
On a general basis.
Is this due to the silos?
Not necessarily to silos.
And is it your testimony that because of that inability to recover certain costs, that there has been harm to your shareholders?
As I said, when the company does not have an opportunity to recover its costs, and as a result, not being able to earn its allowed return on equity, that in turn results in your words, harm to shareholders.
But would you agree that that's considered to be harm to shareholders?
Yeah, it's harm to shareholders.
Your Honor, at this point, I would like to mark a document that I will attempt to establish with Mr. Musilla. Okay. Mr. Musilla, Your Honor, before we mark it, I think I need to establish some foundation here. Are you familiar with the website Yahoo Finance?
I am.
Would you accept, I went onto that site yesterday and found information related to Con Edison Inc., which is your parent corporation, correct?
That's correct.
Would you be willing to accept, or accept subject to check, that this is a chart available to anybody through Yahoo Finance that shows, and I picked the 5-year look of the performance of Con Edison stock over time, and I will tell you that for comparison purposes, the Con Edison is ED in a dark blue, next to it is National Grid in orange, next to that is the Dow Jones, next to that is Public Service Enterprise Group in a light green, and finally Standard & Poor's 500 Index in a light blue are the comparisons that I have listed there. Would you be willing to accept that is a fair and accurate representation of the performances of these various entities over that same time period?
I would accept that.
You know, I'd ask that this be marked as an exhibit that shows the relative stock performance over time.
We'll mark this exhibit 910 for identification. I'm assuming you're going to tie this in somehow to the cross.
Yes, that's what I just wanted to establish the foundation first. Now, Mr. Musillo, as I understand the way that this chart works through Yahoo Finance, is it shows the percentage change over time of the stock price. Is that your understanding as well? That's the percentages on the y-axis on the right?
That's my understanding.
And isn't it correct that according to this, over the last 5-year period, that Con Edison stock performance has exceeded all of the other entities that I've chosen here for comparison purposes?
That's what the chart says.
Isn't that an indication, sir, that investors feel strongly about Con Edison? That your stock prices continue to go up over time?
I would answer that by saying that there's multiple reasons why stock prices increase. But in general, I would answer your question, yes.
Now, on page 23 of your rebuttal, and again, we're in the same rebuttal, the scheme rebuttal. On lines 10 to 11, you make reference to various issues that staff insists on downward-only reconciliations. And on lines 10 to 11, you refer specifically to undisbursed amounts of variable pay reflected in rates. Do you see that?
I'm sorry, what page are you on?
Page 23 of the scheme rebuttal, lines 10 to 11.
Thank you.
Is it your testimony that there should be either symmetrical or upward reconciliation for the undisbursed amounts of variable pay?
No, that's not my testimony.
Is it your testimony that shareholders should receive any portion of the undisbursed amounts of variable pay?
That's not my testimony.
Now, going down the same page, at lines 17 to 22, you note that the commission has recognized certain categories of expense even in one-year rate proceedings. You see that testimony?
That's correct.
Are you aware, sir, that for many decades where the company had one-year rate cases, that there was no reconciliation for property taxes?
I'm not aware of that, but apparently we learned from that.
What about municipal infrastructure expenses? Were you aware that that was not a reconciled item for many years?
I was not aware of that, and apparently we learned from that as well.
I'm sorry that you were.
Apparently we learned from that as well.
Now, turning to page 25 of that testimony, the same testimony. The company makes a reference to you'd make a reference on lines 1 and 2 to higher employee staffing levels. Would you accept, subject to check, and there's an IR, I believe it's already been marked in unions, UWUA Exhibit 4 that you have in front of you. It's the discovery response immediately preceding the one that you're looking at, that your employee, at least your unionized staffing levels, have gone down between 2008 and 2013?
I'll take that subject to check.
The document is available to you there. Now, when you talk about increasing employee staffing levels, are you talking just increasing where you are today or increasing over where you were a few years ago?
My reference here was increasing from staff's position, which was basically, I believe, June 30th staffing level.
Now, moving on to an entirely different issue, which isn't in your testimony, but when I tried to cross-examine the electric infrastructure panel yesterday, they told me I needed to talk to you about it. Are you familiar with the concept of excess distribution charges?
I'm familiar with that concept.
Now, the electric infrastructure panel suggested that the formula for calculating the prepayment variable in that is what rate of return to use. And the company, that panel explained that formula was using a rate set a long time ago, and that I proposed a fixed rate of 10% be used in the formula, and that be set for all time forward. And when I asked that panel how they picked 10%, they said that was Mr. Musillo, not us.
Do you have a name?
Who was here yesterday? Sure, I'll give you 4. Scamenti, Sanchez, Migzad, and Colley. How's that? Now, were you the one that set the 10% rate that's proposed in their testimony?
I was not.
Do you know who was? Because they specifically gave me your name.
To be honest, Mr. Lang, I remember the discussion on this section of the infrastructure panel testimony yesterday. I don't remember them saying that Mr. Musillo said it. Just speaking frankly, I don't remember them saying that it was Mr. Musillo that said it.
Well, they said they didn't, and they thought Mr. Musillo did.
I remember the last question, my recollection of the last question that you asked the panel was, do you think that the 10% rate is the right rate or fair? And Mr. Mixhead said yes. And then the cross-examination ended. Again, I don't remember them referring how that rate was developed to any specific witness, including Mr. Musillo.
It was before that last question that I asked it. But let me just ask you this question, Mr. Musillo. My understanding is in your testimony that you're proposing a rate of return of approximately, it's either 7.59 or 7.58 was the rate I recall seeing. Is that correct?
That sounds right. At the overall rate of return.
At the overall rate of return.
Right.
Is there a reason then for excess distribution charges why you would recover a rate 31% higher than that? And since the formula is based on the company's rate of return?
In order to answer that question, I have to see all the components that make up that charge for excess distribution facilities. On the surface, I don't have an explanation of why those rates would be different. But I couldn't answer it completely without seeing all the components of what makes up that rate.
Now, moving on, and this is actually my second to the last topic, Hudson Avenue, which some parties have talked to a number of witnesses. I have a different issue altogether. In your direct testimony, I believe this is your electric testimony, on page 83,
Got it.
you talk about the land value transferring from steam to electric, and this is, the questions at lines 18 to 20 at the bottom of 83. Do you see that?
Okay, what's your reference? What line?
The question is at 18 to 20, and then your answer starts at line 21 and carries over.
Got it.
To your knowledge, sir, are you familiar with the uniform system of accounts?
The Commission's uniform system
Yes.
accounts? I am.
Are you aware of any provision of the uniform system of accounts that either allows or requires transfers to occur at fair market value rather than original cost?
I'm not aware of such provisions.
Is it your understanding that there is no continuing steam business use for Hudson Avenue?
That's my understanding.
Is it fair to say then that the property in question is no longer considered used and useful as part of the steam business?
I would agree with that.
Is there a reason then why it is continuing separate and apart from the transfer issue? Staff has taken the position, as have other companies, that there should be a transfer. But putting that debate aside, presently it's in steam rates, correct?
That's correct.
If the property is no longer used and useful, why is it still in steam rates at all? I understand about the unrecovered investment portion that's still on your books, and I'm not questioning about that. What I'm questioning about is there are still ongoing expenses that the company is incurring related to this property, correct?
That's my understanding.
And if there's no need and purpose for it, then why is it still in steam rates?
Our proposal was to transfer the unamortized book cost as well as the ongoing operation and maintenance costs to electric.
And if that proposal is rejected, what would you do to protect steam customers from unnecessarily incurring future expenses?
One option is to defer the incremental steam O&M costs, subject to a final commission decision on the disposition of Hudson Avenue.
And one final question on this point that I had asked the panel yesterday and they couldn't answer. And I would ask you, you have an accounting background, you're the controller of the company. If the company has a site, and your infrastructure panel yesterday said you do have a number of sites that you're holding for future use. Some of them are sites that had some prior Edison use on them. And for the future use, there would be a requirement to either tear down what's there or to remediate to prepare the site, which I'll collectively call site preparation expenses. Is it your understanding, sir, that the costs associated with that work would be put into rates as a new cost, or would that be dealt with as a cost of renewal, if you know? Excuse me, a cost of removal, if you know.
My understanding, that would be treated as a cost of removal.
Your Honor, at this point I have one other document I'd like to mark, and that's going to conclude my cross. I think I'm actually out of.
And you don't have another attorney who you're going to spring on us for another half an hour?
No, I'm not.
Has it been 2 hours already?
Your Honor, this is a one-page response by Mr. Musillo dated May 16th to cases set, cases question number 8.
It'll be marked Exhibit 911 for identification.
Mr. Musillo, are you familiar with this response?
I am.
Was it prepared by you or by somebody under your control?
By somebody under my supervision.
Now, earlier we had discussed the discipline process with the company was using for its budgeting process? Do you recall that conversation?
Correct.
Is this answer correct as to when the surcharge process is going to be used?
In terms of when the surcharge would kick in after reprioritization?
Yeah,
That's correct.
that's all I have, Your Honor.
Okay, is there anyone present in the room representing Assemblywoman Pauling? Okay, let the record show that nobody responded, so we're going to assume that that party has passed on their requested cross-examination. Is there any redirect?
Moment, Your Honor. Your Honor, back on the record.
Back on the record.
Your Honor, we just have one question on redirect.
Okay.
Mr. Musillo, when you spoke earlier about being out of service for 8 days, and where do you live?
I live in New Jersey.
Thank you. No further questions.
Thank you. The witness is excused.
Mr. Lucilla, I neglected to follow through with the line of cross I wanted to have on it. What's that? Why the hell, no, God no. Why the hell did you refer to liquor store and emails? Since when does the Rocket Channel do this?
Are we waiting for anybody?
I think the company's here and we're here, and that's all
Okay, good.
that is necessary for, that's all it's the most important of the people on the list.
Okay, let's go on the record. Staff, you could please call the next witness.
Thank you, Your Honor. Alan Michaels for staff, and staff calls its accounting panel.
The panel could please rise and raise your right hands. Do you swear or affirm that the testimony you're about to give will be the truth, the whole truth, and nothing but the truth? Yes. And do you adopt your pre-filed testimony as your sworn testimony in these proceedings? Thank you. Please sit down.
Good afternoon, panel. Do you have any amendments to your filed testimony today?
We do. We have a few corrections.
Can you please describe them?
Certainly, on page 26, line 15, 0.244 million should read 0.230 million.
Could you try to speak up and
Sure.
more into the mic?
Could you repeat those numbers, Mr. Higgins, one more time?
Yep. Page 26.
The light doesn't light up on that one. Just bang it once and see if it's got noise. Try
That
it.
one, you can't remove it though.
Hit it once.
Should try hit it one more time. Not that.
The light doesn't work, so hit it once, try the mic, hit it again once.
Okay.
So, page 26. It's not
It is very good.
Page 26, line 15, 0.244 million should read 0.230 million. Line 16 on that same page, 0.062 million should be 0.048 million. Page 99, line 15, 0.015 million should read 0.012 million. page 180, line 7, 73.874 million should read 73.849 million. And on that same line, 2.500 should read 2.525.
Any other changes, Bill?
Page 111, line 18, 13.552 should read 13.520. And on the following line, line 19, 0.026 should read 0.059. One final correction on page 132, line 2, 2.879 should read 2.880. No further corrections.
Thank you. Your Honor, with that, the panel is prepared and here for cross-examination.
Con Edison for 1 hour.
Good afternoon.
Good afternoon, Mr. Yazzie.
Have you,
Could you your name one more time?
Thomas Riazzi. Have you had an opportunity to review any calculations of the subsidiary capital tax as used in preparing the company's actual subsidiary capital tax return?
You mean the company's actual tax returns?
Yes.
Subsequent to our file testimony, we have.
Have you reviewed the company's work papers for its calculation of the subsidiary capital tax reflected in the company's June 21st update revenue requirement?
Related to the company's calculation of rate year subsidiary capital tax?
Yes.
We have.
Is the way the company calculated the subsidiary capital tax for the revenue requirement purposes in these proceedings consistent with the way it's calculated for the return purposes?
Well, the rate year forecast uses a forecast of the company's equity, whereas the actual returns use the average equity during the year which the tax is determined.
But the components, whether they be actual or projected, they were the same?
Except for the equity balance.
Should the final revenue requirement calculations for the rate year reflect the state and federal unemployment tax rates and payroll bases that will be effective during the rate year as are currently scheduled by state and federal laws?
Yes.
And at this moment, your revenue requirement calculations would need an adjustment to do that, is that correct?
That is correct.
And the subject of labor expense. The company used the average employee level for the historic year of July 11 through June 2012 as the base level to which projected additional hires were added for developing the employee level to be priced out in the rate year. Is that correct?
That is correct.
You propose a different approach, as I understand it, that the base level be the average number of employees for a single month, the month of December 2012, to which projected additional hires are added to get an employee level for the rate year to price out. Is that
No, I don't completely agree with that. What I'd say is that our labor forecast reflects trend analysis that we did that indicated the company's workforce had declined over the last 4 years as we illustrated in SAP 6. And that based on that trend analysis, we determined that the December 2012 headcount is a reasonable labor headcount going forward.
Okay, I just want, you used December 2000, average to December 2012 as the base point to which you add.
Correct.
And that employee level was 13,259, I believe.
Approximately.
Now, you've read the company's accounting panel rebuttal testimony. They disagree with the selection of December and also disagree with using a single month approach. Is that a fair characterization of their testimony?
That is my understanding.
How many new hires or additional employees did you add to your December 2012 base to that employee level for the rate year?
Exactly. We didn't add any additional employees. Well, that's not completely true. The December 2012 base picked up a portion of the employees that were requested by the company that were already hired between June 30, 2012 and December 2012, and then it would reflect the incremental employees that the company had not yet hired.
I guess that's the number I'm looking for. That you added those to the December 2012 base, correct?
We did not make adjustments to that portion of the labor program changes requested by the company.
Do you recall
the number?
How many that was?
It's approximately 42. However, it's unclear at this time whether a portion of those 42 are currently in the company's workforce that were hired after January, or after January through now.
Understood. So you have 13,259 plus 42 in the rate year behind you.
That's correct.
What is the most recent actual average employee level for a month that you have knowledge of?
Don't know if I have it. I believe it's the April number cited in the company's rebuttal testimony.
Did the company provide you with the number as of June as a supplemental response to an interrogatory, do you recall?
I don't recall. Do you have a document I could reference?
Yes. You recall receiving that?
Yes,
from the company?
Yeah.
And any reason to dispute the figures?
No, I mean, this is the numbers provided by the company.
And on the back page, it is the average we pay for June 2013 was $13,400.
That's what this document indicates.
And you agree, or would you accept, subject to check, that that figure is 141 higher than the December 2012 figure that you use as a base point?
Yes.
Your Honor, I'd like this marked with the next exhibit number, please.
This is Con Edison's response to EPS set 550664 supplement. And it's 2 pages. It'll be marked Exhibit 912 for identification.
Bonus depreciation is it's a highly accelerated method of depreciation for plant investments, correct, compared to what was available before.
Well, I'm no expert in tax law, but yes, it accelerates the tax deductions the company that's entitled to on the federal tax return.
And that method of depreciation produced significantly higher cash flows to the company than would be available under the prior methods that were available, correct?
It appears to have.
And the benefits of bonus depreciation are captured for the benefit of customers. Is that a fair statement?
They have.
And that normalization of the accelerated benefits results in a large deferred tax credit balance, correct?
Yes.
And the company's been accruing interest or carrying charges owed to customers on that deferred tax balance, correct?
It has.
In these proceedings, the company and you are in agreement that that deferred tax balance should move from interest bearing, if you will, to rate base, correct?
Yes. Yes.
And approximately what is the rate base credit for bonus depreciation?
Is the question how much is reflected in the rate year accumulated deferred income taxes related to the bonus depreciation or tax depreciation related to bonus depreciation? Is it for electric, gas, and steam?
You described what I was looking for correctly, and the answer for electric, gas, and steam is yes, or I'll take a total number.
You're asking me if I have that number at the tip of my, oh boy. I do have some IRs that were asked related to that topic.
We could try just order of magnitude if you like. I mean, would it be $1 billion?
Do you have something I can look at or some documentation?
Yes, no, it's just hoping you have some familiarity with what was in here.
There's so many numbers in this case, I'm not sure.
Well,
it's a significant amount of money.
You've seen the number because you've checked carrying charge calculations on it.
It's hundreds of millions of dollars.
And let's say $100 million would equate to roughly, in terms of a revenue requirement number, just roughly.
$10 million?
When the use of bonus depreciation became available, using it was elected for the taxpayer, correct?
It was voluntary.
And do you agree with the company's decision to elect to use bonus depreciation?
I don't think I can answer that question. I think that's a decision that's left to the company.
Would if the company didn't elect to do it, then the benefits to customers would not be there, correct?
That would be the result of not taking advantage of the tax law change.
So that election was to the benefit of customers. Agree?
Ask and answer, Judge.
If it's the same answer, just say so.
Yeah,
Let's keep the
it
flow going
appears that
here.
it has been beneficial to customers.
And you explained in your testimony that the company's adoption of bonus depreciation and a carry back on the resulting tax loss caused the company to come up short of being able to realize the tax benefits of the manufacturing tax deduction that had been reflected in the steam rates in 05 S1376. You described that circumstance, correct?
The description given in our testimony is based on an IR response. I think it's IR 410 from the company. That's the company's description.
That's your testimony.
Right. It's our testimony explaining the manufacturing tax deduction as described by the company.
And that shortfall in terms of the tax benefit that the company was able to realize, your testimony identifies it as $4.5 million. Is that also just the company's number?
Yeah.
So would it be fair to say that as a result of electing bonus depreciation and generating benefits for customers, the company paid a price out of its own pocket, $4.5 million?
I'm not sure that, we can answer that question because there's a lot of items that go into the computation of taxes each year. You kind of sort of land on one item and say that this changed because of that. I don't think we're in a position without seeing the entire tax return and all the elements to give you a good answer.
Do you have any reason to dispute the company's testimony that you reiterated in your testimony?
I'm sorry, I don't understand the question, Mr. Riaz.
Your testimony where you actually refer to the $4.5 million compared to a $5.8 million rate allowance. You say that you got that information from the company and put it in your testimony. Do you have any reason to dispute the company's testimony?
Do we have any reason to dispute the company's representations of the evidence that they provided? No.
Now, along with the rate-based reduction of several $100 million, whatever it might be, we said that the company's been accruing carrying charges payable to customers on the balance. Could you take a look at your exhibit SAP1 in the electric case, page 2 of 14?
So that was exhibit SAP 1.
Page 2.
Page 2.
Okay. In the section amortization of regulatory deferrals, 6 lines down, there's a line, customer cash flow benefits, bonus depreciation, correct?
That's correct.
And the rate year amount you have for that is $12,419,000.
That's what's in the revenue requirement calculation for electric operations.
And that would be 1/3 of the projected balance at the beginning of the rate year, given the 3-year amortization. Is that correct?
That's 1/3 of the credit the company estimated that's due electric customers.
And
that has accrued as of a certain date.
is that not the beginning of the rate year?
I can take that, accept that one.
So would you accept that 3 times $12,419 is $37,257,000,000?
Sounds right.
Sounds right, okay. And would you look at the same exhibit, SAP 2, in your yes exhibit, page 2?
Another amortization of,
Yeah, the same thing.
Yep.
So the rate year amortization for bonus depreciation and interest is $6,029,000.
That's correct.
And again, 1/3, or it's 1/3 of the projected balance.
That's correct.
And 3 times 6 million over 29, 18,087,000. Is that?
You're good.
I didn't do it on the fly. And for Steve.
Okay.
This one, exhibit SAP 3, page 2. And the amortization of bonus depreciation interest to the credit of customers in the rate year is $5,421,000.
That's what's in our exhibit.
And again, it's 1/3 of the projected balance.
Yes.
Would equate to projected balance of $60,263,000. Would you accept?
I would.
Okay. So I calculate the sum of the 3-year, the 3 amortizations, the electric, gas, and steam, the numbers, the annual amounts, to be $23,869,000. Accept?
We do.
And the sum of the 3 beginning balances, electric, gas, and steam, $71,607,000. Do you accept that?
We would.
Now, these carrying charges on the deferred tax or bonus depreciation are not the only carrying charges that have accrued to the benefit of customers.
That's correct.
An amount was used in case 12E0008.
That's correct.
Do you recall how much that was?
I don't have a document in front of me. But it was, I think, the largest portion of that customer credit that was passed back in that proceeding.
Would you be willing to accept something to check, and I'll tell you how to check, you know how to check? The amount that was credited to customers in case 12E0008 was $78,762,000 rounded. And you can check that by the company's May 12th filing letter in that case. So I think 3 of the panel members were copied.
It sounds familiar.
So with the $71,607,000 balance available for credit to customers at the beginning of the rate year, plus the $78,762,000 of credits that have already been given to customers. It's over $150 million. Would you agree?
We would. The company had to spend a lot of money to get those credits.
So in light of the magnitude of those benefits that bonus depreciation has generated for customers, if the commission allowed the company to recoup the $4.5 million that is explained in your testimony as it absorbed, would that be an unreasonable outcome for customers?
I think you may be missing the point of why staff doesn't believe this should be passed back or included in the revenue requirements. The point was, in that proceeding, the 05S1376, there was no deferral treatment wrapped around this. The benefits that were included in the rate plan and the actual benefits received by the company, there was no provision for the company to be able to defer the differential between the two. And without going back and looking at the plan, there's a lot of elements in a rate plan that vary from the actual. They may go up, they may go down, and they don't have deferred accounting treatment around it. So to pick one element of cost and say we didn't recover this cost when there's a bunch of other elements of cost that you might have benefited from is a little unfair. And that's staff's position as stated in our testimony.
Unfair to whom?
Excuse me?
You said it's unfair. I'm asking you, unfair to whom?
I guess it'd be unreasonable.
So it would be unreasonable to allow the company to recoup $4.5 million, despite the fact that what they did generated $150 million of benefits to customers that we know about as the beginning of the rate year, plus the hundreds of millions of dollars in credit in the rate base. Is that your testimony?
No, that's not exactly what I stated. What I stated was it'd be unreasonable to single out one cost of a rate plan that was over 9 years ago and say we want recovery for that cost element when there may have been other cost elements that the company benefited from. That's our stated testimony.
In your testimony, you discussed the net plant reconciliation mechanism under the company's current electric rate plan and certain adjustments you made to the company's calculation of carrying charges owed to customers. Is that correct?
That's correct.
And carrying charges owed to customers come about under that mechanism due to variations between actual average net plant balances and those set out as targets in the rate plan for certain separate categories of plant, correct?
Correct.
Now, with regard to the electric plant categories in aggregate, you've calculated that the company owes customers $48.1 million of carrying charges. That number's on page 62 on your testimony.
That's correct.
And one of the separate plant categories is T&D plant, correct?
Yes, that's correct.
Now, of the $48.1 million you calculate as being owed to customers, how much is related to that T&D category? Right. We can hold that question. We can hold that question. Okay.
It's the largest part of
It's the largest part
of that amount.
Now, under that mechanism in the rate plan, whether there's an underrun of actual net plant versus target, and the extent of it is to be determined on a cumulative basis over the 3 years of the rate plan, rather than on rate year by rate year by rate year standalone basis, correct? It's a cumulative calculation.
That's correct. With the exception of T&D, there's a little exception to that general procedure.
Which is?
The exclusion of the eliminating or setting the first year balance to the target if the company's capital expenditures exceed the level that was established in that rate plan.
But even with that, it's a cumulative calculation, correct?
Yes.
Even with that restriction tree. And the actual average net plant for the T&D category exceeded the rate plan target for the first rate year, correct?
There's a question, did the company's actual net plant exceed the target? That's my understanding.
And then there were underruns in the T&D category, actual versus target, in the second and third rate years?
That is also my understanding.
Your Honor, I'm passing out a single-page document that, and handing it to the accounting panel, and I asked them if it is a copy of the portion of the work papers related to the carrying charges under the net plant reconciliation mechanism that shows a summary calculation taking into account all plant categories and then on the right-hand side, calculation just for the T&D category. Do you accept it as such?
Yes, it appears that, yes, I've seen this before.
Your Honor, may I have this document marked with the exhibit number?
It'll be marked as Exhibit 913 for identification.
I asked a moment ago approximately or how much of the $48.1 million total that you calculate owed to customers is related to the T&D plant category. With reference to your work papers, you can answer that question now?
Yes, it appears that 37,623,000 of the 48,100,000 was related to T&D expenditures.
And you're getting that amount in the most right-hand column of your worksheet, about a half inch up from the bottom. I see a number in parentheses. There's 37,623.
Right, that's how staff computed the number.
That's your number. Now, that 37,623,000 is the sum of the two numbers above it, the 14,508,000 and the 23,115, correct?
Yes.
And the other amount, and they're the numbers for rate year 2 and rate year 3, correct?
That's correct.
Okay. And the number for rate year 1 that shows in that box is 22,027,000, correct?
That's what it shows.
Is it not correct?
Oh, it's correct. No, I believe it's correct. I believe the numbers add and are calculated correctly.
Okay. But in arriving at the $37,623,000, you didn't include that rate year one amount of $22 million with the rate year 2 and 3 amounts, correct?
That's correct. It was excluded.
Why?
Because the company did not provide any information to the staff that demonstrated that its actual capital expenditures exceeded the level established in the rate plan for rate year one. There were discussions back before the company filed its case late last year, and actually staff had a meeting with the company to discuss several things with this particular reconciliation mechanism. And one of the discussion items was this issue, and there was never any follow-up or any information that was provided to staff to allow staff to make a decision on that, whether in fact that it was appropriate to include the rate year one amount.
I mean, whether or not the aspect of the rate plan you referred to earlier about the effect of expenditures in rate year one causing net plan to be exceeded, that is right. By how much was the average net plant, the actual average net plant balance during rate year one in excess of the target for rate year one?
I don't believe, I don't have that information.
Is it in the second column from the right? Again, about a half inch up from the bottom, the number that's 176,680,000.
I'm sorry. That's what this work paper seems to suggest.
Okay. Now this work paper lists book costs and depreciation, actual amounts and targets amounts by month through the 3 years of the rate plan. Correct?
Very detailed, yes.
Yeah, really. So now, if we go up to the line where the numbers start to appear, the top line that says March 10, the dollar figures along that line, they represent balances or targets as of March 31st, 2010, correct?
Yes, I believe that's correct.
Okay. And the first day of the first rate year under the current rate plan was April 1st, 2010. Do you agree?
I do.
Okay. What was the relationship between the actual net plant balance and the target net plant balance March 31st, 2010?
Are you asking us what the relevance of the 17,149,702 is?
No. And let me put it another way. Looking at the March 31st, 2010 line, in the net column, it says actual 13 million, actually that's billion, isn't it? 13
That's correct.
billion, 508,307,000. And the next number is the target for that date, correct?
Right, I assume that the rate plan developed the rate year average for rate year one, started with that March balance.
Okay. So, on March 31st, 2010, the actual net plan balance exceeded the target by the $130,536,000 that's in the next column, correct? It's just a difference between the two numbers.
That's what the work paper shows.
Now, the aspect of the rate plan that might limit the carrying charge calculation during the first rate year is related to capital expenditures during the first rate year, correct?
As we discussed, correct.
Okay. So, no portion of the $130 million or $130,536,000 was spent during the rate year, correct?
Not unless the company made adjustments to its books thereafter.
These are the numbers we're calculating, right? Right. So, the day before the rate year started, the actual was $130,536,000 over the target.
That's what this shows.
Okay. And since it was in the $130,536,000 was in the relationship between the beginning balances, that amount is a constant every month, correct? So the average, it affects the average for the rate year by itself.
You know, I want to step back here where we're talking about this $130,536,000. There are also other issues that we had with the company's computation. That is that there were some plan additions that were included in the company's reconciliation that we took issue with, and they were discussed in our testimony. The World Trade Center plan, monies that we moved over from the WC deferral to the net plan, and
yeah, you explained that in your testimony.
We did, and I'm not sure whether that this particular worksheet encompasses or reflects those adjustments to the company. So, although that this worksheet may show that number, there's been additional changes to this schedule. Even the company's update in June, and maybe they've updated it recently too, reflects a different number at the beginning of this period. So I'm not sure if that 130 million is the number that we want to use in this proceeding. I'm just not sure what this latest schedule is. It's been revised a number of times.
But this, in the column, pretty much in the middle of the page that says interest, if we go down that column, we find $48,100,000, correct? Is that not the $48,100,000 in your testimony?
I'm sorry, Mr. Riaz, can you point me to that number?
Near the middle of the page, the most right-hand column of the summary section.
Okay, the 48.
Right.
48,100,000.
Do you have it in the interest column? Yes. That's the number that's in your testimony.
That's correct.
Yeah. Oh, okay.
Yep.
Okay. And the $37,623,000 was calculated as part of that beginning at a point before the start of the rate year where the actual exceeded the target by $130,536,000.
That's what this worksheet shows.
Okay. So in your calculation of the rate year one carrying charges, in the $176 million, $176,680,000 excess of actual over target during rate year one, $130,536,000 existed before the rate year started, correct?
I don't know the schedule well enough to say you're correct.
It's what the schedule shows, correct? It shows a balance on March 31st, 2010.
It shows, I believe, that 176,680,000 that you refer to is an average number. The 130,536 is a point in time. Is that an average during the rate year? I'd have to think about this for a little while. I'm not sure.
All right, well, maybe we can figure it out.
And like I noted earlier, there were other changes. There's been numerous changes to this reconciliation calculation, and I'm not sure exactly where it stands as of this moment. I agree that this was the work paper that supported our updated position.
And you got to this updated position by making adjustments of the nature you said. You described them in your testimony.
I believe that to be correct. I believe they incorporate all the adjustments.
If I have $130,536,000 in the bank on December 31st, 2012, and during the year I make deposits and withdrawals, and I come up with a higher amount at the end of the year, and I calculate my average balance for the year, isn't the point I started with in the balance every month?
I'm sorry. I'd like to answer your question. Can you ask again?
Probably not exactly. Is the beginning balance in the average balance for a 12-month period the same? Except there are pluses and minuses to it. If you take out the beginning balance, you're going to get an average balance that's less by the beginning balance, correct? Okay.
You lost me on that question too. Let's say your beginning balance is 130, and then in the first month it goes down instead of up. Okay, so then the next month your full beginning balance is no longer there for that month. So
right.
I'm not sure I understood your question exactly.
What I'm saying, Your Honor, is that the beginning balance would change by increments, but every balance is 130 higher than it would have been if I didn't have the 130 to begin with.
I think that's obvious.
Thank you. And so since $130,536,000 was the amount by which the actual was over the target going into the rate year, then it accounts for its own amount, the 130, 536, and the average for the rate year. Correct? I think the judge just established that.
Well, you know, I mean, you can say that, but the way that the joint proposal was prepared, this was the language that the first year, the target would be set to, the actual would be set to the target if, if the capital expenditures exceeded if the company's actual capital expenditures exceeded the target that was established in the rate plan. I mean, although what you may be saying is correct, the methodology that was in the joint proposal would suggest excluding that amount of money. That would just the way that is prepared on this worksheet. This worksheet conforms to the deferral accounting or the reconciliation mechanism that was identified or spelled out in the joint proposal.
The comparison of capital expenditures that you're referring to is a comparison of what happens during the rate year, correct? Expenditures during the rate year. Is that not what the joint proposal says?
In the joint proposal, yes, that's correct.
Okay. So if the actual balance is $130 million over the target before the rate year starts, how much of it could be related to capital expenditures that occurred during the rate year?
I hear you, Mr. Riazzi, but the mechanism speaks for itself. You're asking.
I'll take that. I'll take that. I'll take that. Now, just the interest rate that's used to calculate these carrying charges is shown at the top of the most right-hand column, right? 13.798%.
That's correct.
That's correct. And since you've been trusting my numbers so far, would you accept that 13.798% of $130,536,000 is $18,011,000?
I accept.
Okay. So of the $22,027,000 of rate year one carrying charges that you did not combine with the rate year 2 and rate year 3 amounts, 18 million of it is related to activity, it's something that happened before the first rate year started, correct?
That's what the numbers work out to be.
Okay. Other than capital expenditures during a rate year, let's say, that might vary, actual might vary from the targeted capital expenditures used in developing the net plant target. Other factors can cause the actual average balance to exceed the target, correct?
Yes.
Such as a higher beginning balance, correct?
That's correct.
Okay. Such as dollars being transferred to plant and service sooner than contemplated in developing the target,
That's correct.
correct? And that could happen even if expenditures during the rate year are below the target or the expenditures that were used to develop the plant target, correct?
That's correct.
It's all a matter of time. I just have two documents I'd like to have marked. Mary, give you piece of paper? So,
I'll do the second one in 1 second.
you have in front of you a document consisting of 3 pages indicating that it's your response to Con Edison interrogatories, set number 41, request numbers 133, 134, and 135.
Yes.
And do you accept this document as your responses to those questions?
Yes.
You want that, Mark?
I'm sorry, yes, Your Honor.
Exhibit 914 for identification.
You've been handed a document indicating that it's your response to Con Edison interrogatory, set number 19, request number 80. Do you accept that as your response to this question?
Yes.
Your Honor, may I have that document marked, please?
Exhibit 915 for identification. Did the panel have any corrections or updates to the 4 responses you were just given?
No.
Thank you.
Nothing further, Your Honor.
Thank you. Question is whether there's any redirect.
If we could have a minute, please.
And if there is, you have to ask at least one question of my friend, Mr. Daniel, over there.
That was good.
Okay, let's proceed.
Thank you, Your Honor, no redirect.
It looks like Claude got off, huh? Thank you, you're excused. Okay, if I could keep everyone's attention for 1 minute. Mr. Diamantopoulos, I think you had an administrative matter you wanted to deal with.
Thank you. The company and NYCC have discussed David Bonke not testifying tomorrow. And in lieu of him doing that, we have affidavits from Mr. Bonke electric, gas, and steam for submitted reserves. The original experiment.
Okay, and the affidavits include a slight change in his testimony?
They do, I'm sorry, yes. In the electric case, Mr. Bobke has the following corrections. On page 7, and all these changes are on page 7. Line 6, 2.1 million should be changed to 1.1 million.
You don't need to read them, I just wanted to point it out. It's not just a witness affidavit, it's actually a substantive affidavit.
It is, Your Honor. Two of them are, in electric and gas. I'm sorry, in electric and in gas. The steam adopting the testimony as it was. Yes, I can. He actually told me that he scanned it and now it's I can send the parties next week.
Okay, these affidavits will be marked collectively as Exhibit 916, and the parties will receive an electronic copy. Are there any other matters anybody wants to bring up at this point? Okay, hearing none, we're adjourned till tomorrow at 9:30. Thank you.